So guys, we are live. Am I audible to you? Whether my audio video is clear to you? Perfect, sir. Yes, sir, audible. So, hello everybody and welcome to the CA Final Direct Taxes and International Taxation batch Safal. Not batch Safal, but our batch, but equivalent to batch Safal, and that too in complete English. How you all are doing? Let me know in the comment section so that we can start off with today's session. Sir, till yesterday we completed off capital gain. I gave you one question. One beautiful question to be solved. It was a good question. Many students sent me presentation wise, everybody was nearly correct. Answer wise, most of the answers were incorrect. Let us solve first question answers, whatever question answers were pending for capital gain. Then we can proceed forward for next chapter. All set, or shall we start with concepts in the morning and then we can proceed with question answers? What's your say? What's your say? Shall we do question answers first, or should we go for concepts? Good morning, Anjana. Good morning, Harish. Good morning, Neha. Good morning, Vaishnav. Shall we go for question answer first? What's your take? Concepts, then QB. Perfect. Okay. Noted. Come on to next chapter. Good morning, Kevina. Good morning, Anjana. Okay, everybody wants to study concept first. Good morning, Vijay. Now, directly come on to the chapter income from other sources. Very small, very light chapter. Question and then concept set. Now, Vaishnav, you went late. You have gone late. People have said concepts, so we are going to proceed with concepts first, and then we'll proceed to question answers. See, there are 5 or 6 odd questions. We will solve them all. We will solve them along with questions of IFS. IFS is a very small chapter. First of all, can you all name the section number for? Can you all name the charging section in capital gain? You remember charging section, any gain arising from the transfer of capital asset shall be taxable under the capital gain in the year in which transfer took place. This was the charging section in capital gain. Can you all tell me which section number was applicable for capital gain charging section? Which section number was applicable? Neha says section 45. Right answer is yes, 45. Specifically saying 45(1). Similarly, for PGPP, we have section number 28 as charging section. If you talk about salary, we have section 15 as charging section. If you talk house property, we have 22 charging section. All these charging sections explicitly talk what all incomes would be taxed under these specific heads. Similarly, for IFOS also, we have a charging section called 56 as Harish said. Section 56(1) clearly states down what all things would be taxable, and basic premise of all IFOS says any income which is not taxed elsewhere, which is not taxed under salary, which is not a salary, which is not a house property, which is not PGBP, which is not a capital gain, and which is also not exempt income shall be taxable under the head income from other sources. Only premise of this section is income which is not taxed anywhere else will be taxed here. Remember, but that income shall not be exempt also. Basic premise is this. In line to these provisions, 56(2) clearly lays down certain incomes which would be taxed under IFOS. One by one, I am going through. There is a long list of incomes which will be taxed under IFOS. Some are to be studied in depth. Some are covered in some other chapters. Some are not to be studied in depth. They are just a one-liner incomes. We'll study one by one. First of all, dividend income. Dividend income is always, 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 always IFOS. Remember, if you have a business of trading in shares now, still dividend would be IFOS. If you are an investment fund, still dividend would be IFOS. If you are FII, still dividend would be IFOS income. Dividend is always IFOS income for every associate. It can never be a PGP income. Remember. But still, we have to study this dividend in latter part of the session. Interest on securities from bank, loan given, or IT refund. Again, interest income is normally IFOS income. When it will be IFOS, when it will be PGBP, we will study in latter part of the session. Income from lottery, puzzle, card game. You remember it? Lottery income that was taxed at 30% in first session. We understood. These incomes are normally taxed under IFOS. This lottery income is taxed under IFRS. We will be studying this in tax rate chapter after PGBP. Along with that, whatever the winnings from online gaming turn out to be, this will be studied in the other chapter that when we will be studying tax rate chapter. So online gaming and lottery, these two are also taxable under IFRS. We have income from letting out of plant and machinery and furniture. If you let out a house property, it is taxed under house property head. But if you let out land, if you let out a plant and machinery, if you let out a furniture, then such income is not house property, it is taxed under IFOS. How we are going to tax it? Again, to be discussed in latter part. Now we have amount received as scheme and insurance policy. If if a business done does some scheme and insurance policy, what is scheme and insurance policy? Let me tell you. For example, as of now, for Reliance, the key person for the business is Mukesh Ambani. You all understand this thing. Without Mukesh Ambani, most of the decisions are senseless. Mukesh Ambani takes the most of the decision. So, health of Mukesh Ambani, life of Mukesh Ambani is very important for Reliance. We'll come, Kevana, we'll come. Good morning, Kishore. Perfect, perfect, perfect. See, everybody listen, everybody who is attending this session for the first time, every session till the 11th session or 12th session are independent. If you have not studied yesterday's class, you are welcome in today's class. If you are not studying today's class, you will be welcome in tomorrow's class. See, classes are independent. I never ask you to have a knowledge of prior classes. Whatever we have studied in prior classes, I always refer once and again so that you are not required any knowledge of prior classes. So if you are joining at 10th class also, no, it is okay. But come live. Everybody is requested to come live. Even if you are watching recorded and you have option of coming live, now do come live. Okay. Sir, scheme and insurance policy. Mukesh Ambani is very important person for Reliance. So it is necessary for Reliance now to insure Mukesh Ambani. It is necessary na for Reliance to insure Mukesh Ambani. Yes, of course. Insuring Mukesh Ambani is a business expenditure for Reliance. Insuring Mukesh Ambani is a business expenditure for Reliance. And whatever proceeds that Reliance would be getting on account of any demise, on account of any casualty, would be taxable. Would be taxable for Reliance. Provision clearly demonstrate that if any company receives on account of Keyman insurance policy, that is normally taxable under PGBP. Why PGBP? Because deduction of expenditure was taken now. This is P&L of Reliance. Reliance paid insurance premium, say 100 crore. Every year, Reliance pays premium of 100 crore rupees for the life of Mukesh Ambani. It is a business expenditure because life of Mukesh Ambani is very important for the business of the Reliance. So for that matter, Reliance pays this premium. In return, for example, in case of any demise, in case of any death, in case of any casualty, Reliance receives 1000 crore as insurance money. Provision says this would be taxable under PGBP. Therefore, if you see the ULIP taxation, specifically a line is mentioned that ULIP does not cover life insurance policy, does not cover Keyman life insurance policy. Do you remember in capital gain we studied LIP? LIP is taxed in IFOS, but sir, this Keyman insurance policy is not taxed in IFOS. ULIP is taxed in cap gain, but these Keyman insurance policies are not taxable in cap gain. These are taxable in PGBP because these are business receipts for an entity. These are taxed under PGBP. But there are certain instances where this would be treated as IFOS also. Only a few instances are there where this might be treated as IFOS. What are those instances? Let me tell you. For example, Reliance is very important. Reliance is into multiple businesses. For Reliance, key managerial personnel is Mukesh Ambani. Any insurance done on account of Mukesh Ambani would be business expense. Any receipt on account of death of Mukesh Ambani would be business receipt. Very clear point. What if Reliance buys insurance for, let's say, Narendra Modi? Modi ji. Is it the business expense of Reliance to buy the insurance of Narendra Modi? Is this the business expense? Is this a business expense? Right answer is no now. Why would Reliance buy Keyman insurance policy for Narendra Modi? Of course, life of Narendra Modi might be important for Reliance, but it is not their business expenditure now. Are you getting this point? Of course, life of Prime Minister is important for everybody, but these are not business expenditures now. So if Reliance buys any life insurance policy, Keyman life insurance policy for the life of Narendra Modi, do you think that insurance would be allowed expenditure? Right answer is no, insurance would be disallowed. Provision says if insurance is disallowed, then receipts would not be taxed under PGBP, rather they would be taxed under IFOS. Did you get this point? What I am saying, if you have any key person in business, that person might be connected to business or that person might not be connected to business. So if you buy human insurance policy for a person who is directly connected into the business, expenditure would be allowed, income would be taxed at PGBP. But if you are in buying the insurance of some remote person who is not even related to business, expenditure would be disallowed and income would not be taxed in PGBP, rather it would be taxed in IFOS. This provision was actually introduced because of Reliance. This provision was introduced because of Reliance. And I mean, honestly, we don't have much time to get into the deep depth of this one-liner explanation. But can you imagine? Earlier, Dhirubhai Ambani used to take his life insurance on account of company, and whatever receipts that company might receive on account of life of Dhirubhai Ambani, that was exempt from taxes because it was not taxed in PGBP, it was not taxed in IFOS. This provision was lacking. This provision was not into existence. When Dhirubhai Ambani was alive, this provision was not taxable under IFOS. So this was exempt for Reliance. So just because of Reliance only, this provision came into picture. P. Chidambaram amended the Income Tax Act and specifically taxed human insurance policy under IFOS. Even after retirement, Dhirubhai Ambani used to pay his Keyman insurance policy premium from Reliance. No deduction allowed, but whatever receipts that Reliance would get would be exempt from taxes. So this was the tax planning that he did. Who all are covered under key managerial. See, KMP insurance में important people. These are not KMP. These are not KMP that you study as per law. These are not KMP. These are key managerial personnel, key man insurance. That means important person for the business. Any people who is important for the business is key man. Got it, Neha? These are not KMPs as per in law. As per companies law, we are not considering. For individual business also, I can be a KMP. I can be a key man. Interest received. Interest received on compulsory acquisition of a land. Yes, day before yesterday, we understood this point that if we have a land and that land is compulsory acquired, and compensation is paid very late, so we are awarded interest for that, and that interest is also deductible at the rate of 50%. Provision clearly states that any interest received on account of compulsory acquisition is taxable under IFOS, but this topic we have studied in capital gain topic. If you remember, advance money forfeited on or after 1st April 2014. Perfect, Vaishnav. Advance money forfeited after 1st April 2014. If advance money was forfeited after 1st April 2014, it was taxed under IFOS. But if it was forfeited before 1st April 2014, it was reduced from cost of acquisition. If you remember, this was the provision we studied. And this topic was studied in capital gain. Any kind of gift received, gift always have to be studied from the recipient point of view. Always, always, always. If you receive any gift, it should be taxed. How it should be taxed, we have to study in detail, too much of detail. Family pension. What is family pension? Yes, after Modi government. This is what I want you to learn, because this is how we learn actually. Family pension. What is family pension? How it is being taxed? All too much to discuss. Salary of MP MLA. Salary of MP MLA. What MP MLA see? You know, you must have seen a man in safed kurta, white kurta, cap on their head, just bowing down their heads at the time of election. Yeah, don't give vote. Go. Don't give your important vote to anybody else. Give it to us. These people in white kurta are not employees of your. These are not government employees. These are not professionals. These are volunteers. In Hindi, we call them the seva karte hain log. Seva, seva. They don't do any business. They don't do any profession. They don't do any employment. These do seva. These are volunteers. These are just volunteers. These politicians are volunteers. They don't earn any salary. They don't earn any kind of professional income. Whatever they earn is other sources. Wow, sir, wow. Whatever they earn is other sources. Because it is not their salary. Na? Provision clearly states that any salary of MP, MLA, MLC. MP implies member of parliament. MLA implies member of legislative assembly. MLC implies member of legislative council. These people are not your employees. Na? Even though they are there to work for you, but they are doing volunteering services. These are not your employees. So provision says MP, MLA services are considered as IFOS only. Remember, but any daily allowance, contingency allowances are exempt. These allowances for them are exempt. We don't have much depth in this topic. Therefore, whatever written here is the ultimate thing. For example, we have Neha. There happened a search at the house of the Neha. Officers were roaming around. They were looking to find out different things. He could not find, assessing officer could not find anything. All of a sudden, out of anger, assessing officer threw the stick that he had towards the wall. He threw the stick. He could not find anything at the Neha's house. Whatever he had in his hand, he threw with full force, and all of a sudden he could hear tung through the voice, because the walls of her house were not made from bricks. Walls of Neha's house were made from gold. After excavating, they found out that Neha has undisclosed too much of gold that she has bought, and she has used that gold to get her house built. Oh dear Lord. People don't have 1 gram of gold at their home, and Neha's entire home walls have been built with gold because she has not disclosed this money. Provision says if department finds out any undisclosed income at your home, they shall be taxed from section 68 to 69D, and this is the topic that we have to study under miscellaneous chapter. Oh wow. If you are a director in a company, if you are a director in a company, whatever receipts you have is your professional receipts. Correct? No, sir. Director are the employees of the company. Plan B. Perfect. Directors are the employees of the company. Whatever company pays to director is their salary income. It is salary income. TDS under 192 is applicable. But sir, what if director is independent director? Director is an alternate director. Director has been appointed just for 1 month. He has been coming as an honorary serviceman. Provision says these directors are considered as part-time directors, and any payment made to them would be taxable under IFOS. Just understand, if I am a whole-time director in a company, I am a regular director in a company, then whatever salary I will be receiving would be taxed in the salary. But if I'm a part-time director, I'm just an independent director. I just get honorarium. In that case, such honorarium would be considered IFOS. Sir, got this. Next point. You know what? What happened? One day I was taking this beautiful examples in income tax. Every example that I used to take used to bring a smile on students' face. Every student was satisfied. Every student was happy. Every student who had never thought of enrolling for the class has started enrolling. If you have not enrolled, enroll it as soon as possible. And if even if you have not liked the video, do like it. What I was saying, yes, I was teaching beautifully. Every student liked my classes. Regular, slowly and steadily. Everybody was liking my classes. But you know what? One day, Adish sir, Adish sir said, "Dear Rahul sir, my wife wants to teach TT." Sky above my head was lost. The earth below my legs was losing. Adish sir's wife wanted to teach DT. He requested Sarthak sir to expel. I was crying in the corner. I was crying in the corner. Adish sir's wife wanted to teach DT, and therefore Sarthak sir expelled me. But I am a man made of rock. I said, Sarthak sir, dear Sarthak sir, why should I leave? Why are you expelling me? Sarthak said, Maha life, Maha rules. Maha life, Maha rules. He said this thing. I asked him, Sarthak sir, what will I do? Sarthak sir said, whatever you want to do. I said, Sarthak sir, I want at least 20 lakh rupees if I leave today. I want 20 lakh rupees. I'm not going to leave. I'm not going to leave. If you are terminating me, if you are terminating me, I want this compensation. Without this, I'm not going to leave. My question to all of you, that this compensation paid by Sarthak sir for to me to leave the service, to leave the job, under which head this compensation would be taxed? We are with you, sir. Thank you so much. Thank you so much, dear. At least even I said salary. And right answer is yes, it would be taxed under salary. If Sarthak sir pays me any kind of payment for termination of employment, if I receive any kind of salary on account of termination of employment, provision says it is always salary. It is always salary. So what income would be taxed under IFRS? I am just changing the example. This time Adish sir's wife do not want to teach DT. Now there is an institute, Allen Career Institute. As of now, it doesn't teach us CA classes, but it started CA classes later on, and it saw my YouTube video. It was so inspired that Alan approached me, said, Rahul sir, will you please come to teach DT at Alan? I said, no, I am very much inclined to Sarthak sir. I am very much inclined. He has been helping out throughout. I will not leave Sarthak sir. Alan said, please come to us. We'll offer you 1 crore package. I said, no, I will not leave. I will not leave. I will not leave. I have agreement with Sarthak sir. He is going to charge me 20 lakh rupees if I leave. He is going to charge me 20 lakh if I leave fast. Alan said, Arey Rahul sir, why you worry? We are giving you 40 lakh rupees. Just leave. Pay 20 lakh to Sarthak sir. Pay 20 lakh. Keep 20 lakh with you. Keep a 1 crore package with you. Just come and teach to us. Teach with us. Now, in this case, whatever salary that Alan is paying me just to leave my employment, this is taxable under IFRS. Did you get the difference? If my employer paid any sum for me to leave, it is salary. But if somebody else pays me any sum just to leave my employment, these are called IFOS income. Kevina says, IFOS company do this to buy out employees. This compensation from prospective employer is IFOS. Beautiful, Kevina. Summarized by Kevina. If it is paid by a person other than employer, and if any payment is made by person other than employer, then it is considered as IFOS. I hope you got the point. Last, we have any other income which is not taxed elsewhere. Any income which is not taxed elsewhere is considered as IFOS. I mean, if you see any income which is not taxed anywhere is considered here. Yeah. Why different color combination? Whatever things that are marked in blue are to be studied in depth. Again, in latter part of the session. Whatever things that have been marked in red are covered in different chapters. Either we have to study these things or either we have already studied these things. These are covered in different chapters. And whatever the things that are marked in green, remember these things are only this much. We don't have more detailed explanation to this. These are only things. So if you want to mark it down, you can mark it down. But we have detailed explanation of these five incomes. We have to study these five incomes in depth right away, starting from taxation of dividend. How dividend is taxed? First of all, sir, any company can only pay dividend, any business does can only pay dividend. Only two people can pay dividend. First thing. Second thing, dividend is always paid out of post-tax profit. Dividend is always paid out of post-tax profit. I know you are aware of this thing, but just let me brief it out to you. If a company earns 100 crore profit, it pays taxes of 25 crore. Then out of 75 crore, it has to pay the dividend. Dividend is always paid out of the post tax, and this dividend which is paid out of post tax profit is received by shareholders and it is taxable again in the hands of the shareholders at in IFOS head. That means whatever profit that company earns shall be first taxed in the hands of the company, and after tax profit has to be distributed to the shareholders, and that receipt shall also be taxed in the hands of the shareholders under IFOS. For example, individual is being taxed at 30%, so this dividend would be taxed at 30%. For example, Rahul is the shareholder. Rahul received a 75 crore dividend. It would be taxed at the rate of 30% in the hands of Rahul. 30% turns out to be nearly to 22.5 crore, which would means nearly 52.5 crore is the amount that is being received by Rahul. So can you see the difference? Company earned 100 crore and Rahul only earned 52.5 crore. All the middle portion have been taken by the government. Twice income has been taxed by the government. Twice twice the things have been taxed by the government. Whatever company earned versus whatever Rahul received, there has been two tax implications between them. First of all, income is being taxed in the hands of the company, then distributed to the shareholder, and then it is again taxed in the hands of the shareholder. Twice taxation took place twice. This is the basic premise of the dividend. If anybody wants to pay some dividend, first of all things will be taxed in their hand, and then it will be distributed, and then again it is being taxed in the people hand. Therefore, if you see anybody who is earning and paying dividend, it is a difficult issue for them. It is a difficult issue for them. Almost went to government only. Yes, it is always taxed twice. Therefore, it is not advisable to pay dividend. Normally, it is not advisable to pay dividend. Normally, working for government kind of, yes, 50% of the time we are working for government. My point is 50% of the money goes to government, 50% of the dividend goes to government, 50% of the almost earning goes to government. Now don't you think that people will try to save taxes at least at some point, at least at the point of recipient, or at least at the point of company, people will try to save it? Got it. Keeping this thing on a hold for a minute. Dividend for shareholders is taxable, company it is exempt. Now we have normally three kinds of dividends. First of all is final dividend. Any dividend that is declared at the time of AGM. After the year is over, AGM takes place, and in AGM, dividend is being declared. That dividend is called final dividend. This is taxable in the year in which it is declared. Whenever dividend is declared, it is taxable. We don't have to wait for receipt. Final dividend is taxed in the year of declaration. See, our company has to pay this dividend within 30 days. So almost every year, whenever it is declared, it is paid only. Interim dividend, every quarterly dividend is paid out. Provision says interim dividend is only taxable when it is received. Here we don't have to wait for declaration. We have to wait for receipt. And third thing, we have deemed dividend. It is being taxed in the year in which it is distributed by the company. Now, I'm just telling you one picture. This is balance sheet of Rahul Private Limited. Share capital 1 crore, reserves 9 crore, assets 5 crore, cash 5 crore. Now, just to think of Rahul point of view, this reserves and surplus have this reserves and surplus are already post-tax reserves and surplus. This reserves and surplus are already post-tax reserves and surplus. Of course, sir, reserves and surplus are always post-tax. That means government company has already paid taxes. After paying taxes, whatever the profits are, these are 9 crore. That is what the point is. Now, what if Rahul wants cash out of the company? Can he take out the cash? Perfect. Can he take out the cash? Sir, if he takes out the cash, it would be considered as dividend. Any cash taken from the company is dividend. Of course, the shareholders taking cash from the company is dividend only. What Rahul did, instead of taking away the cash, he took away the assets. And if you remember, as per Section 123 of Companies Act, dividend in India means only the cash dividend. Dividend in the form of any other thing is not considered as dividend. So what Rahul did, Rahul took away the assets of the company to avoid the taxes. It is not considered as dividend. In the hands of Rahul, it would be exempt. No taxes. No taxes, because in the hands of the Rahul, it is not dividend. He took away the assets of the company, no dividend. But sir, government had other intention. Provisional government said distribution of assets by the company to the shareholders to the extent of accumulated profits. That means to the extent of 9 crore of profits, whatever assets that you take now are also considered as dividend. Because as per Companies Act, only cash component taken is dividend. But income tax says if you take assets, then too it shall be considered as dividend. Oh dear Lord. Then how do I take money from the bank? How do I take money from the business? I want to take out money and don't pay any taxes. I want to take out money and don't pay any taxes. This is what I want to do now. I want to take out money and I don't want to pay taxes. What I did, I did something crazy. I issued debentures to myself. Every one shareholder got one debenture. 1 crore liability created. 1 crore liability created. And now, in against payment of that liability, I took out the cash. I am not paying cash in free of cost. No, I have created a liability for the company and then I am paying the liability. This is not a dividend. Provision says any distribution of debentures, deposit certificates, or debenture stock to the shareholders or bonus shares to the preference shareholders is also called deemed dividend. Not actual dividend, but presumed dividend. Oh dear Lord, oh dear Lord, oh dear Lord. What can I do? What can I do to take the money out? What can I do to take the money out? What I did, I liquidated the company. We have studied this. Whatever assets at the time of liquidation we take out, whatever assets at the time of liquidation we take out, we suffer capital gain, and capital gain is taxed at the rate of 10% only or 12.5% only. Then we will be in a joy. We could have easily paid 30% dividend taxes if we would have taken the cash out or asset out. But after liquidation, whatever assets we receive, it is capital gain. It is capital gain. So we save taxes. Government said nothing. Wait. Government have different intentions. Government said distribution of assets on liquidation to the shareholders to the extent of accumulated profits is also deemed dividend. I want to take out the assets from the business. So for that matter, I liquidated the company. On liquidation, whatever I see would be capital gain. Provision says, nah, Baba, na, to the extent of accumulated profits, na. To the extent of accumulated profits, any distribution at the time of liquidation shall also be considered as deemed dividend. What do I do? How do I take money out of the business? How do I take money out of the business? What I did, I reduced my share capital. My share capital is 1 crore now. I reduced to 20 lakh rupees, and against 20 lakh rupees, I took away these assets. Provision says reduction of share capital shall also, any distribution on account of reduction on share capital shall also amount to deemed dividend. Any distribution of assets on account of reduction on share capital to the extent of accumulated profits shall be considered as deemed dividend. You cannot seriously touch any of the assets. It would be considered as dividend. Continuing further, what government said, what I did, what else I could do, what else I could do, what else I could do. I found out what the fundamental issue is. I found out what the fundamental issue is. And on analysis, I found out that fundamental issue is these reserves. Any distribution to the extent of these reserves is considered as dividend. What if I did something very crazy? I announced bonus 1:9 held. Sorry, 9:1 held. I announced a bonus. What I did, I had reserves of 9 crore. What I did, for every shareholder who has one share would be given 9 shares free of cost. Now share capital would turn 10 or reserves and surplus would be 0. Now any dividend would not be any distribution would not be taxed because we don't have reserves. Only to the extent of the reserves only. Now, to the extent of reserves only it is taxed. Any distribution to the extent of accumulated profits is only taxed. Now we don't have any accumulated profits, therefore no taxation. Arey Baba, government had other intentions. Government had other intention. Government says whether you have capitalized that profits or not. If it is capitalized also, if reserves are capitalized in the form of bonus, if reserves are capitalized in the form of capital reserves, still it would be taxed. Even if you had reserves, you capitalize it, you willingly capitalize it to share capital by issuing bonus, we would still tax it. That doesn't mean you don't have any reserves. You have wiped off the reserves just to evade the dividend taxation. Therefore, we would consider we would consider capitalized profits also for the purpose of dividend distribution. Therefore, even if you capitalize these reserves in the form of bonus, still up to 9 crore worth of distribution would be deemed a dividend. Oh dear Lord. I was tired with these provisions. I was tired with these provisions. How do I save taxes? How do I save taxes? How? Sir, can't you convert this into LLP? This is a company. Can't you convert this into LLP? Remember, if any company has assets exceeding 5 crore, it cannot be converted. Let us assume assets were not 5 crore. Can you convert it? Sir, even if you convert, sir, to the extent of reserve surplus standing on that last date of conversion cannot be utilized, cannot be taken away by the LLP. Therefore, even if you convert, you cannot use these reserves. Oh dear Lord. What options do I have? What options do I have? I want money from the business. Whenever I take out the money, it is considered as dividend. Whenever I take out the money, it is considered as dividend. What should I do? What should I do? I am crying out loud in the corner. What should I do? I said, instead of taking the asset for myself, why can't I take loan from the bank? I took loan from the company. Loan term is 15 years. Interest is 0. Loan term is 15 years. Interest is 0. I don't have to repay even. Even if I default, what would company do? What can company do to mine? Companies and mine only. Mine only. So I took money in the form of loan. But sir, government had different intention. Government came up with section 222E, which says any payment by the company in which public is not substantially interested. This is important. 222 is only applicable to unlisted companies. Any company which is unlisted company distributes distributes any sum by the way of loan or advances to the shareholder having more than 10% voting power. Company distributing to shareholder who has greater than 10% of voting power. Company distributes to any shareholder in which such shareholder is substantially interested. For example, company gives any loan or advance to a partnership firm, and in this partnership firm, the shareholder holds more than 20% of PSR. Then too, it would be considered as deemed dividend. If this company gives any sum to any worker who is being influenced by such shareholder, provision says any loan to this worker would also be considered as deemed dividend. So company paying any sum to the shareholder who has 10% or more voting power would be deemed dividend. Company paying any sum to any partnership firm, any AOP in which such shareholder has substantial interest, which means 20% or more, then in that case such partnership firm, such loan given shall also be considered as deemed dividend. And if company pays loan, if a company gives loan or advance to any third person who acts on behalf of such shareholder, provision says such advance or loan shall also be considered as deemed dividend. Two or three important provision. This provision is only applicable to unlisted companies. And second thing, these provisions are applicable to loans and advances as well. Advances and loans as well. Both the things are to be considered. Loans and advances, both the things are to be considered in this case. So what did I say? Company paying loan or advance to shareholder exceeding 10%, shareholder having 10% or more shareholding, it is deemed dividend. Company paying loan to a firm AOP in which such shareholder has substantial interest, it would be deemed dividend. Company paying loan to third person, company giving loan to third person who acts on behalf of the shareholder, then it shall be considered as deemed dividend. All the three cases, it shall be considered as deemed dividend. Remember, company gives loan, then to it is deemed dividend. Company give advances, then to it shall be deemed dividend. My question to all of you. First question. This is balance sheet of Rahul Private Limited. Share capital 1 crore, reserves and surplus 9 crore. Cash 10 crore. This cash was given to Rahul as a loan on 1st May 2024 at an interest rate of 12%. Market rate of interest is 10%. And market interest is being a loan is being given on 10%. But company gave me at 12%. I repaid the loan on 1st June 2024 with interest. Now, my question to all of you, should this be considered as deemed dividend? I took, even see, on the last date of balance sheet, I have already repaid everything. I don't have any outstanding balance. On last day, I have repaid everything. I don't have anything outstanding. Even I paid more interest than what is being charged in the market. Should this be considered as deemed dividend? Should this be considered as deemed dividend? Meow, 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 meow. Meow, 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 meow. Vijit said yes. Vijit says yes. Why Vijit? Yes. Okay. Vaishnav says no. That is what I wanted some answer. Even if charged interest and repaid. Yes, interest is charged even if it is repaid. See, we have two people. One is saying yes and the other one is saying no. Starting away from Bijit said yes. Vaishnav says no. Harish, even if charge, interest and repeat, I guess Harish means yes. Anjana means yes. What other people think? Neha says yes. Should be given as deduction, right? What should be given as deduction? No deduction, Anna. No deduction. No deduction. No deduction. Sir, it is considered deemed dividend. Yes, irrespective of the interest payment, deemed dividend. Irrespective whether it is outstanding on balance sheet or not, still deemed dividend. Irrespective of anything, deemed dividend. Sir, but what if? What if I had capitalized these reserves and my reserves and surplus are zero, my share capital went 100, then should it be deemed dividend? Right answer is no. If I capitalize these profits now, then now it is not considered as deemed dividend. It is not considered. Why? Because this term, whether capitalized or not, is only in four sections, not in this point. That means if you have not if you have capitalized these reserves and then giving some loan, it is not deemed dividend. Capitalized or not has been intentionally written and cut down so that you are aware of this fact that if you capitalize reserves in the form of share capital and then distribute the loan, it is not deemed dividend. Now, sir, here comes a fundamental issue. Here comes a fundamental issue. What fundamental issue is arising? For example, Rahul is a very technical guy. Rahul is a very technical guy, and he is very important for the company. And he is also a shareholder, but he only works on advance basis. Perfect. And Vaishnav, understood. Sir, Rahul is a very technical guy and he is the shareholder of the company and he only works on advance basis because the type of business he does require advances. For example, let me tell you one picture. Company requires software development services and Rahul is the software developer. This is the company. This is the company. Rahul Private Limited. Share capital 1 crore. Reserve surplus 9 crore. Cash 10 crore. Now, Rahul is the shareholder. Company requires software development services and company has to pay advance because this kind of business require advances. Now, don't you think if company declares gives advance of 1 crore, this is normal as per industry parlance. This is required in its industry parlance. Don't you think that this should be allowed? Don't you think that this should be allowed? My question to you, if any such advances are being given in ordinary course of business, or if such advances are given in the form of trade nature, or if such advances are given against the services that company is going to receive, should this be taxed? Should this be taxed in the hands of the uh, in the hands of the shareholder? Rahul is only receiving advances just because industry's requirement is to take the advances. I'm not talking about loan, I'm talking about advance. See, loan is always taxed, but advances, don't you think that it would make the business difficult? Because in smaller companies, it is easier to get work done from the shareholders. No? It is easier to get work done from the shareholders. Now, if we would tax any advance paid to the shareholder, then it would create too much of mess. Now. So therefore, this is not deemed a dividend, and this judgment came in multiple, innumerous high court judgments. I cannot tell how many judgments we do have with respect to such thing. Most important of all is Pradeep Kumar Malhotra. No need to remember the High Court name, no need to remember the year. Just remember Pradeep Kumar Malhotra case. It is not deemed a dividend. It is not deemed a dividend. 222 is not applicable to advances in the case of ordinary course of business. If we give advances in the ordinary course of business, or advances which are of commercial nature, or advances in return to which we are getting any services, such advances are not deemed a dividend. Even if we have capital to them, it is not deemed dividend. Whenever any asset is distributed under section 222A, B, C, D, sorry, 222A, C, D, then FMV of such asset shall be considered. FMV of such asset shall be considered for the purpose of deemed dividend. Capitalize implies converting the reserves and surplus out of the reserves surplus into bonus. Another form of dividend we have any distribution by the company on account of buyback. See, company, just I'm giving you an example for reference. We'll study this topic later on. In later part, we'll study this topic. For example, Rahul had 1,000 shares of Reliance acquired for 1,500. Reliance proposed the buyback for 2,000 rupees and took away 100 shares of mine. Out of the 1,000 shares, 100 shares were bought back at rupees 2,000. Rahul received 2 lakh rupees. Provision says whatever proceeds, irrespective of the proceeds, irrespective of the profit, irrespective of loss, anything that you receive on account of buyback is deemed dividend. Anything that you receive on account of buyback is deemed dividend. I will not get into much detail because we have to study this buyback in assessment of various entities topic, where we will also understand what previous provisions of buyback were. But remember, this buyback provisions are only applicable if buyback is done after 1st October 2024. Then only these provisions are applicable. Before that, different provisions would apply. Before that, whatever applies, we will study in latter part of the session. Are we clear with taxation of dividend? How dividend is being taxed? Are we clear with that point? Are we clear with that point? Aye, aye, Captain, we got that. Yesterday, I shared a rough super 100 with you all. A rough super 100 where we had a question, okay, where we had one question from IFOS also. You don't have to take this printout. See, also one more thing. Huh? What issue was, if you are watching this live or recorded, just listen to this carefully. If you have bought the lectures, correct? Then do check out the language that is mentioned. You must have got mail of confirmation that your lectures have been bought. If you have got a mail in which it is mentioned that your classes are English classes, then you will be given access to English class only. But if in your mail it is mentioned that you have bought the mixed language, language implies in Hindi. So if your mail says that you have bought Hindi lectures now, so give a mail. Do give a mail at faststudentcare.com. Sorry, faststudentcare @gmail.com. Drop a mail at this mail ID. They will give you access for English batch. See, if your mail specifically states that you have bought English lectures, you will be given access to English only. But if your mail says that you have bought mixed language, then you have to mail it at fast student care so that you are provided English access. Otherwise, it is possible that you might get Hindi access, and it might cause difficulty watching classes. So if you have not checked out the mail, do check it out. If language is different, then do mail it today only, so before sending you access, you will be given proper access. Okay, second important thing, this super 100 is not final. See, two chapters are final, capital gain and IFOs are final, whatever I have mentioned, but don't take printout of the super 100 because this is not complete. Today I will release another sheet, another super 100. This you can take the printout. That super 100 you can take printout. That will be absolutely final. 142 questions this time I have incorporated, which would include many new questions from RTPs and exam paper. I have removed some of the questions, so these will be very finite and this will be very much doable. Out of that, I am asking you to come to question number 13. What this question number 13 says. Try understanding what question is asking you to say. Question is just confusing multiple times. This question tries to confuse you multiple times. Mr. Manju Menon is an SSC from Coimbatore, has 20% of shareholding in private limited company. Manju Menon is a person who has 20% shareholding in a company called Aurelia Exports Private Limited. Aurelia Exports Private Limited. Manju Menon has 20% shareholding. Perfect. The SSC has immovable property in Coimbatore which was let out to the company on the monthly rent. How to prepare MCQs, Neha? Just understand the concepts. You will be able to prepare MCQs. See, I have done all the MCQs. Okay? I have done MCQs from RTPs also, past paper also. I have done the 35 case studies also. I have done every MCQ. So for that pattern, I know the gist of every MCQ. So I have prepared a gist as well. Yeah, if you see my Telegram channel, I have prepared a gist of MCQs. That gist is going to help. Plus, whatever the concepts are being tested in MCQs, I will also cover those concepts in class only. We have covered multiple concepts, plus we will cover more concepts. So you don't need to worry about MCQs. If you are aware of the concepts that we have done in the class, you will be able to attempt every MCQ that has come till now. Plus, with the given concepts, you will be able to attempt new MCQs as well. No. Manju Menon has a land. Now, since he has a land, he has given this land to the company. He is a shareholder. He has a land and he has given this land to the company. The SSC permitted the company to provide the property as the collateral to ABC Bank in order to enable the said company and obtain the loan. Oh dear Lord. Consequently, property was mortgaged to the bank in 2013. At that time, Board of Directors passed the resolution authorizing the SSC to obtain the company interest-free loan up to 20 lakh rupees as and when required for making the property available as collateral to the bank on the loan facility. Okay. In June 2024, Manju Menon asked the advance rent and received 15 lakh rupees from the company as advance rent in June 2024, which was to be adjusted against the rent payable by the company. After such adjustment for the year ended 31st March 2025, the amount of advance rent stood reduced to 8 lakh rupees. The accumulated profits as on that day was 10 lakh rupees. The assessing officer in the assessment order made 8 lakh rupees as deemed dividend. Can advance rent given to the Manju Menon be considered as deemed dividend? Sir, we did not understand anything. I know, I know, I know. Let me decode it to you. Manju Menon holds 20% in Aurelia Exports Private Limited. Now Manju Menon has a land. This land was given to Aurelia on rental basis. Rental basis. Plus, Manju Menon has also allowed this land to be given as mortgage to bank. For example, if this Aurelia Exports want any kind of loan, they can mortgage this land and get the loan. Oh dear Lord. That means if Aurelia Exports do any kind of default, then this land would be gone. Yes, land would be gone. That means Manju Menon is at risk. Yes, Manju Menon is at risk. He has a land that he has given to the company, and company can use this land as a collateral for the future repayments. Oh dear Lord, this is risky. Yes, it is risky. But Manju said it's okay to me. In return to that, what Aurelia did, Aurelia passed a board of director resolution that whenever Manju Menon requires, the company might give him 20 lakh rupees worth of loan, that to interest free. Of course, if loan is given to a shareholder, it is a deemed dividend. It is deemed dividend. What I'm saying, I have given a piece of land to the company. Company has mortgaged that land to get a loan, and company has also passed a board resolution that whenever I would be requiring 20 lakh rupees, company would give me as interest free. This is the basic concept. Yes, this is basic concept. But what Manju Mehta did, it did not ask for any loan. Every month he was getting rentals now. So he said, just pay me advance rent of 15 lakh rupees. Manju Menon said, pay me advance rent of 15 lakh rupees. Manju Menon received 15 lakh rupees. Every month, some of the rent was actual rent payable was deducted until the end. He still had 8 lakh rupees of advance rent. He did not take any loan. He just took rentals in advance. 8 lakh rupees outstanding advance rental he has already received. Assessing officer found out that 10 lakh is the accumulated profits. That means whatever advance rent that this company has paid to Manju Menon is deemed dividend. It is deemed dividend. Whether assessing officer is correct or not. Whether assessing officer is correct or not. See, just think of from a shareholder point of view. I have given my land. That land is being mortgaged by the company. In return, shouldn't I expect anything? I am given an option to take a loan, but I am not taking loan because taking loan would make it deemed dividend. So I did not take loan, but rather I took advances. I took advance, and that advance I am adjusting on monthly basis. But still, I have advance of rupees 8 lakh rupees. I still have advance rent of 8 lakh rupees that I will be adjusting in future rents. But I do have advance, and assessing officer treated this advance as deemed dividend. Could this be considered? Vaishnav says no. Anjana says not correct. We have two people saying not correct, and we have two people saying not correct. Let me tell the answer. The advance of 8 lakh rupees outstanding cannot be brought within the purview of 222 since it is not in the nature of the gratuitous advance, but it was given on the rent to protect the interests of the company. That means it is not deemed dividend. Now, how do we write these type of answer? These theoretical answers are written in a format called three paragraph format. Three para format. First paragraph talks about the legal text. As per section 222E, any loan given by the company to the shareholder who exceeds 10% of the voting rights, or loan given to any entity in which such shareholder has substantial interest, and any loan given to any person on such behalf shall be considered as deemed dividend. But if loan is given to but if advance is given to any other person who that advance is in commercial nature, that advance is in ordinary course of business, and against that advance a service is to be received, then it shall not be considered as deemed dividend. This is where you have to write the legal text. This legal text you have to write, and the same legal text is written here. Now you have to relate your legal text to the current provisions. What legal text relates to this? In our case, Manju Menon has received advance rent, and this advance rent was against the property that he has given to the company. So it is his legal right. He can have advance rent, and it is normal ordinary course of business to receive such advance rent. This is the legal text you have written. And at last, conclusion you gave that such advance cannot be considered as deemed dividend. And at last, if you want to write, you can write the case law Pradeep Kumar Malhotra versus CIT at Calcutta High Court that it is not the deemed dividend. Three paragraph answer. I hope you got the point. It's not that difficult at all. This question wasn't one of the difficult question. Or this wasn't the difficult one. Taxation of interest income. If you receive any interest, interest can be taxable interest. Interest can be exempt interest. Interest can be taxable. Interest can be exempt. Interest can be anything. Which interests are exempt? See, if you receive any interest on PPF, it is exempt. Public provident fund, any interest received is exempt. If you receive post office savings interest on post office, then up to 3500 is exempt. But if you have a joint account, then 3500 per person, that means 7000 interest is exempt. If you receive interest on gold deposit bonds, if you remember definition of capital asset, can you all recall the definition of capital asset? Capital asset, any asset is a capital asset. Securities held by FII is a capital asset. ULIP in some cases is a capital asset. We have studied this. Plus, we took four exclusions. If you remember, any stock in trade is not a capital asset. Any movable personal asset is not a capital asset. Any rural agricultural land is not a capital asset. And any gold deposit bond and gold monetization certificates are not capital asset. That gold deposit bonds that were excluded from the definition of the capital asset, interest on gold deposit bonds is also exempt. Remember, gold deposit bonds are not sovereign gold bonds. Gold deposit bonds are something different. Here we have gold deposit bond in which interest is exempt. SGBs are taxable. Interest on SGB is taxable. Therefore, SGB is written and cut down. These are exempt interest. The other interests are taxable ones. You can receive interest on loan or securities. You can receive on interest on FDRD savings, or you can receive interest on IT refund. Understand this. If you have given loan to somebody else, or if you have invested in debentures, bonds, then you might receive interest. Provision says, first of all, check whether is it your business to lend out, or is it your business to invest in to trade in securities. Provision says if it is your PGBP, na, if it is your PGBP, if it is your business to lend to somebody else, if it is your business to trade in securities and earn interest, provision says then it is your PGBP income. But if it is not your business income, it is a part-time activity, you have given just loan for one time, then it is IFOS. What did I just say? If business, if it is your regular business to lend out, if it is your regular business to trade in securities, then it will be PGBP. Interest can be PGBP. But if it is your part-time work you are doing just once, then in that case, what you have to do, you have to consider it IFOS. What this? Shubham. NGL. Hi, sir. Thank you so much. Your YouTube revision and question marathon question answer video on YouTube scored exemptionity. Wow, Shubham. Congratulations. 63. Couldn't clear group 2 IDTs. 53 didn't score in IBS. No issue. This time you'll clear. Okay. Only focus is IDT, and if required, one is the only focus. Well done, by the way. Heartiest congratulations. But group 1 and IDT this time in sufficient 55 days. Yes, it is doable. It is doable, doable, doable. Shubham, it is doable. Even if you have forgot something, it is doable. 4 subjects are doable in 55 days. Okay. Baki, thank you so much for your gracious behavior. Somebody who just watched the revision videos from YouTube and coming and thanking is something. I mean, what I should say, a really sensitive moment for me. Thank you, Shubham. Continue. If you receive any interest on fixed deposit, recurring deposit, or saving deposit, most welcome, Shubham. If you receive any interest on bank deposit, FD, RD, and savings, it is always taxable under IFRS. You will see many questions in your PGBP where it is mentioned that company received interest on FD, company received interest on RD. It is always IFRS. If you are individual, you earned any interest, it will be considered as IFRS only. Remember, any interest on account of FD and RD is considered. If you receive any kind of interest on FD, RD, it is always taxable under IFRS. Last thing, sir, interest on IT refund, it is also taxable under IFRS. Always, 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 it is taxable under IFRS. Honestly, if anybody is referring to the videos, they are actually goated. Wow. Especially the question answer videos. Thank you so much, Shubham. Thank you so much. So, focus, no focus, focus, focus again. Thank you so much, Shubham, for your kind words. Literally, thank you so much. It is a great gesture, look up and message in this manner. Thank you so much. Really honored. Now, what interest I am talking about? Try listen to this. If you receive any interest on loan or any kind of securities, normally you have to check whether it is your business or not. If it is your business, then PGP. If not, then IFOs. If you receive any kind of bank interest, FD interest, RD interest, savings interest, provisions, it is always IFOs. If you receive any IT refund, it is IFOs. No issue. But sir, here is a catch. Whenever we have interest on loan or securities or interest on FD, RD, it is taxable on the year of accrual. Even if you have received or not, we don't care. If you have received this interest or not, we don't care. It is taxable on the year of accrual. But interest on IT refund is only taxable in the year of receipt. Remember, this taxability is important. This taxability is important. Sir, sometimes what happens, we are required to make a FD just which is because necessary for the conduct of the business. We are required to make a FD for import for conduct of the business. Like for example, if I want to get an electricity connection for my factory, I have to do security deposit of 5 lakh rupees. Otherwise, I will not be given any connection. Every month, I am given interest on such security deposit. Even 1,000, 2,000, whatever the interest is, I am given interest on such security deposit. What I am saying? Some FDs, security deposits are necessary for the conduct of the business, without which we cannot do any business. So provision says if such FD, if such deposits are necessary for the conduct of the business, that they are taxable under PGPP. We require electricity deposit, whatever electricity deposit we do, it is taxed under PGPP. Most oftenly, if you pay any interest expense, it is net off or it is written as gross up. That is clearly accounting adjustment. But my point is to tell you that if any FD is necessary for the conduct of the business, it shall interest on such FD shall go to PGPP. This is all about interest taxation. Rent from plant and machinery, furniture. What this point says, provision says any kind of renting of plant and machinery, any kind of renting of plant and renting of house property. If I have a house property, if I rent it out, provision says it is taxable under house property head. What I am saying, if a company gives a loan to sister concern, will that be PGP or IFRS? If a company gives loan to sister concern, will that be IFRS only? If it is not your, if you don't do on regular basis, it is IFOS only. It is IFOS only. Any interest on loan, any interest on loan is also covered here, Kevin. If you have a house property, if you have a house property and you rent it out, so whatever income you receive would be taxable under the head house property. If you have business of renting out, if you have any plant and machinery, if you have any house property, if you have any kind of land which you have a business of letting out, provision says it would be PGPP. First of all, house property will go to house property head. Any other kind of renting, but you are in a business of such renting, provision says it will be PGBB. But if you have a land, if you have a plant and machinery, if you have furniture, and you don't have a business of letting out, you are just letting out right now. Otherwise, you don't your business is not of letting out. Provision says it shall be IFOS. It shall be IFOS. It shall be considered as IFOS. Got this point or not? Yes, sir. We got this point. Whenever you offer income under IFOS, gross rent is considered. You are not given 30% deduction the way you used to get under house property. Plus, you get deduction under section 57. Whatever the direct expenses you have incurred for that house, whether it is repairs, whether it is insurance, whether it is depreciation, whether it is water expenses, whether anything which is directly attributable, that can be reduced, and this will give you net income from house property. Net income from plant and machinery, net income from land, net income from any such asset. Sir, I have a question. For example, it is very common. I don't know whether in India it is common or not, but in your US, I have seen this. It is common. How did you know it is common? I have seen many web series which says that it is common. For example, I have a 2 BHK. I have a 2 BHK on which I pay monthly rent of 30,000 rupees. Now, I am a single person now. What would I do of this 2 BHK? So, other 2 BHK has been sublet by me. Say to a person named Shubham. I have a 2 BHK which has been let out to Shubham. Now, my question is, I am getting a monthly rent of 20,000 rupees. Under which head this 20,000 would be taxed? Head of income for this 20,000 rupees of monthly rent. I have already taken property on rent and I am giving this on rent again. Under which head it would be taken? Under which head it should be taken? Anjana says IFOS, and right answer is yes, it would be IFOS. Why it would be IFOS? Because it is a kind of subletting. You don't have a house of your own. You don't have a house of your own. And most oftenly, you don't own that house now. Ultimately, if you own a house and you earn a rent, it is house property. It is income from house property. But you don't own a house here. You are just earning, you are just having a house taken on rent and you are again subletting. Subletting has been exclusively covered under IFOS. Therefore, it would be considered as IFOS only. Even if you are given a rent on land, if you have a piece of land on which no construction has taken place, provision says any rent received on such land shall also be considered as IFOS. That completes our rent. That completes our income from renting of plant and machinery. How much we have done? Let's brief us. Let's brief it. How much portion of the chapter we have done? We have done dividend. We have done interest on securities. Lottery puzzle to be done later. Renting on plant and machinery done. Keyman insurance policy done. Interest advance we have done these. Gift to be done. Salary done. Undisclosed income to be done. Another chapter. That means only two things we need to cover and the chapter will be over. One is gift and the other one is family pension. Let's take family pension first and then we'll move on to gift. What is meant by family pension? See, you remember, you must be aware that many of the army people get pension, and in earlier life, in earlier earlier part of the century, government employee used to get pension. Income tax department and past employees used to get pension. After retirement, they used to get pension. For example, if I am a government employee, I am retired, I get monthly pension. That monthly pension is taxable under that salary. If I get monthly pension, that would be taxable under that salary. What if the person is deceased? That employed person then is dies. So whatever the pension is being received by the family, that pension is called family pension. Person is dead, person died, and his family is receiving pension. That is called family pension. Provision says that pension received by the family member of the employee is considered as family pension. It is taxable under that IFOS. The person receiving the pension, if he is the employee, it would be salary for him. But somebody who is his family member, he is receiving that pension. Provision says it would be IFOS for him. So family pension is normally IFOS, but whenever a pension is received and it is taxable under IFOS, members get a deduction. Deduction under section 57. How much deduction they get? Provision says one third of the family pension they get deduction. Whatever the family pension they receive, one third or 15,000 per month. And remember, if such family member is opting for 115 BAC, he is paying taxes under 115 BAC, then instead of 15,000, they get an annual deduction of 25,000 per annum. What did I just say? Pension received would be IFOS, but recipient would get deduction. How much deduction? One third of family pension or 15,000 per annum. But if such person is paying taxes under 115 BAC, then he would be taxed at the rate. He would get a deduction of 25,000 or one third, as the case may be. Remember, any family pension received by the recipient of Paramveer Chakra or Veer Chakra would be exempt. Any family pension received by the uh, any uh, any officer of armed force, paramilitary force after their death, if any family pension has been received by their widow or their children. So if any army official, armed force, paramilitary person dies, any family pension received by their widow or their children would be completely exempt. So this is all about family pension. Also, this is also done. Wow, how fastly, sir, we are doing this. Oh dear God, how fastly we are doing this. It is easy. Now we have different topic, that is gift taxation. This is the topic that has to be excavated in depth. Too much of depth in this topic. I can assure that you must have not studied this gift taxation the way I am teaching. First of all, gift taxation is always. So anybody having any doubt? Anybody having any doubt till now? Anybody having any doubt to now or in this topic? These were easier one. These topics were easier one. No, sir, all clear. Perfect. Moving forward to gift taxation, always understand gift taxation is always studied from the viewpoint of a recipient. I am giving gift. Arey Baba, it is not. I don't have to study this taxation. How to remember these limits? These are overwhelming. Don't remember, Rajan. Ignore this limit. Only remember 25,000. Otherwise, you can ignore this limit. See, if you read it two or three times, this if you read this chapter syllabus two or three times now, you would feel like these are not overwhelming. Anjana, two revisions read to properly will make you realize that these are not overwhelming. Honestly, don't try to learn everything. At first, just go through everything. I absorb everything. Second time, try learning whatever is learned. Okay. Third time, when you will read the concept now, everything would come to your brain. Three revisions, it is overwhelming. Whenever required, I will ask you to learn. Otherwise, you can forget. This 15,000 limit, you can forget. You just have to remember this 25,000 limit. Anjana. Till now, in this chapter, we have not covered. We have not seen any limit. In Capital chapter also, I didn't remember there were too many limits. Of course, there were certain dates to be remembered, but otherwise there wasn't much limits in that chapter also. Okay. Receiving gift. Always we need to understand that taxation of gift is from the viewpoint of the recipient. Always be a recipient to understand the taxation. Do not think of sender. Do not think of the transferor. Do not think of the donor. Always think from the recipient point of view. I am receiving gift. Should this be taxed in my hands or not? I am receiving the gift. That is what the bottom line is. Now, some gifts are exempt, some are taxable. Some gifts are taxable and some are exempt. Which all gifts are exempt, which all gifts are taxable? First thing says, if any gift has been received on the following cases is exempt. The rest are taxable. Which gifts are exempt? First of all, if gift has been received from a relative. If gift has been received from a relative, it is exempt. I am receiving a gift, it is exempt. If a gift has been received on marriage, it's exempt. Of course, gift has to be received in my marriage. If I am married to my wife, if I am getting married to my wife, I should be getting the gift. That will be exempt for me. Just imagine I am getting married and my father is getting gifts. Will it be exempt in his hand? Right answer is no. Any gift received by my family members would be taxable in their hands. Only I am the one, only the person who is getting married and receiving gifts would be exempt. Okay. Because whoever has the marriage, that is only required to get gifts. Otherwise, everybody else would be taxable. Everybody else receiving gifts would be taxable. Third thing, any gift received on account of will or inheritance. If I am getting a will, it is exempt. If I am getting any assets on account of inheritance, it is exempt. Any gift due to death of or the donor of the payee. For example, if somebody said after his death, any assets that the other person has will be given to me, provision says that is exempt. Any gift I got from local authority. For example, I got cleaner roads. For example, I developed a factory, and because of for that factory, local authority developed a road nearby. Any gift I received, it is exempt. Any as an institution, as a hospital which is registered under section 12ab or 1023c, any trust, any asset received by such trust or institution is exempt. It is not considered as gift. It is not considered as gift. Whether it will be exempt or not, that is the matter of trust taxation. But will that be 56 to 10? Right answer is no, it is not 56 to 10 gift taxability, gift taxation. COVID related exemption, you can strike it down. I personally think that these COVID related exemptions are not going to be asked. Provision says if you have undergone COVID treatment, then anybody paying for your COVID treatment would not be considered as gift. If after somebody's death, their family members get some kind of get some kind of ex gratia money, then it will be exempt. If received from employer, it is 100% exempt. If received from somebody else, exempt up to 10 lakh, but should be received within 12 lakh. You can cut this down. COVID has, COVID has been over since 5 years. It has been more than 5 years that COVID has gone. In that case, these exemption was only applicable up to 12 months from the end of the COVID now. So these exemptions have already lapsed 4 years, 3 years back. So you don't need to study this. You can cut this down. If we create a trust, Rahul creates a trust, donates some money for the benefit of my relative only. For example, my daughter. Provision says if individual creates a trust, donates certain money for the benefit of your relative only. Remember, this trust is not registered. If this would have been registered, then already it was exempt, but it is not registered. Provision says if you donate to a trust for the benefit of your own relative, any benefit received by the trust is exempt. It is also exempt because ultimately the money is going to your relative only now. So if it passes through trust, it is exempt. Oh dear Lord. Is it worth noting? Right answer is no. This chapter is of least importance right now. We don't even need to study this chapter, but still it is a part of syllabus, so I'm not skipping out. You don't need to focus much on this. These following gifts are exempt. Gift received on account of marriage, gift received on account of relatives, on account of will, on account of inheritance, on account of death of the donor, or from local authority, or as a trust if I am receiving any gift, as a hospital, as a child, as a religious trust if I am receiving a gift, it is always exempt for me. These gifts are exempt. These gifts are exempt. Now question arises, what is a relative? Who is a relative for me? Who is a relative for me? Who is a relative for me? I want you all to take your free white paper where I want you all to write some things. 56 to 10 relative. Who is relative as per 56 to 10? This relative definition is going to come multiple times. So try understanding who is a relative for me. Okay. I am an individual. Always and always my spouse will be relative of mine. My spouse will always be relative. My children plus their spouses would always be relative. Plus implies spouses. My children will always be relative of mine. For example, I have a son, son's wife would be my relative. If I have a daughter, daughter's husband would be relative. If I have a granddaughter, grandson, that will always be my relative. Lineal ascendant, lineal descendant. As an individual, if I have a brother, he would also be my relative. As an individual, if I have a sister, she would also be my relative. Remember, brother's spouse plus sister's spouse would also be relative for me. Not just this thing. My spouse's brother, spouse's sister, and their spouse shall also be my relative. As an individual, my brother and sister, my spouse's brother, sister, and their respective spouses would also be relatives. Okay. Easy, easy, easy peasy, easy peasy. As an individual, my mother, father, spouse's mother, father, father-in-law, mother-in-law would be my relative. My mother's brother and sister, my father's brother and sister, plus their relative would also be, they will also be my relative. In Hindi, we call Bua, Tat, Bua, Pupaji, Chacha, Chachi, Mosi, Mosaji, Chachaji, Chachi. These four people and their spouses. In addition to that, my lineal ascendant and my spouse's lineal ascendant, plus their spouses. That means my Dadaji, my Dadi, Nanaji, Nani. My spouse's Dadaji, Dadi, my spouse's Nanaji, Nani. These all would be relatives. Can you see a picture? Can you see an animal? Can you see a creature being drawn? Can you see a creature being drawn? Dur ki rishdari. Yes, 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 yes. Dur ki rishdari. Can you see a creature? Can you see a creature? Just I'm laying down the diagram. If you can see. Four horns. Can't you see a creature that I'm drawing? I have even drew a tail. Now are you able to understand? It's a creature, yeah. He's a Jerry mouse. He's a Jerry mouse. Mouse. Four horns. He's a mouse. He's a mouse. See what I did? I asked the team to draw a mouse. I asked the team to draw a mouse, and in return they drew this mouse. I wanted you all to see this mouse. If you carefully see, this is a mouse. But team drew this mouse. So this was the mistake that they did, but need not to worry. You would understand with this mouse. See, whenever I refer to a relative referred under section 56 to 10, you must be aware of this mouse. Okay, you must recall a mouse within yourself. Individual, your spouse. For individual, his brother is a relative plus their spouse, sister, and spouse. For spouse's brother and sister plus their respective spouses. For individual, his mother father would be relative, his spouse's mother father would be relative. For individual, his mother brother and sister and his father's brothers and sister would be relative. Dadaji dadi lineal ascendant and spouses dadaji dadi and spouses nana nani would also be relative. Got this point? Again, this mouse has to be drawn multiple times so that you are aware of the relatives. Otherwise, your relatives would fade away. You would not be able to recall the relatives. Therefore, these relatives are important. Now, let's do one thing. I, Rahul, my father and father's brother, I gave a gold chain to him. Will it be exempt in his hands? Will it be exempt in his hands? Just answer me. I gave a gold chain to my father's brother, to my uncle. I gave him a gold chain. Will it be exempt in his hands? Will it be exempt in his hands? Hmm. We have yes versus no. Hivana says no. Neha says yes. What other people say? What opinion you have? If I give a gold chain to my father's brother, Harish says no. Are gold chain. Are Baba, so much of logic you have. 2 lakh worth gold chain. Okay. Rahul's hands exempt. Eh. See, you need to understand this fact that I don't ask questions from the logic that is yet to be taught. Once topic is over, then only I correlate different topics. Otherwise, I don't correlate. I don't ask any question that has not been taught. Bijit says no. Right answer is right answer is no. This should not be taxed. Why this should not be taxed? Just think, my father's brother, that means my uncle. My uncle, he is the recipient. My uncle is a recipient. For uncle, just think of you as an individual. Just think of you as an individual. You are receiving from the gift. You are receiving the gift from the brother's son. You are receiving a gift from the brother's son. Your brother is your relative, but your brother's son is not your relative. Therefore, any gift received from your brother's son is not exempt. It is taxable. What did I ask? I don't remember. I asked whether it is taxable. For that matter, you said no, or whether it is exempt. For that matter, you said no. I don't remember. Honestly, I don't remember. But for an individual, my brother's son is not relative. Therefore, any asset received would be taxable. And person sending is not relevant. For the purpose of 56 to 10, for the purpose of identifying whether it is taxable or exempt, sender is not relevant because sender does not faces any kind of gift taxation. Okay, sir. Okay, sir. Okay. Oh, dear Lord. Hmm. For a sender, it is not relevant. Yes, Kevina, Neha, exempt, yes, son taxable. Okay. Now I am saying uncle receiving gift is taxable. But same uncle returns that gift to me. Will that gift be taxable in my hand? Question reversed. Uncle gave a gold chain to me. Will that be taxable? Yes or no? It was taxable in the hands of uncle because for uncle, his brother's son is not relative. But whether for a person like me, will it be taxable? Harish says no, and right answer is no. Right answer is no. It will not be taxable because if I receive a gift from my uncle, he is my relative. It would not be taxable. It would be exempt. It would be exempt. It would be exempt. See, maybe there is confusion between yes or no for what you are saying. Yes, I am not aware whether it would be taxable or not. That is what my question is. I hope you understood whether it is taxable or not. Are you able to identify whether two people are relative or not? Whether two people are relative or not, are you able to identify? See, if I am giving a gift to my uncle, recipient is uncle, think from uncle's point of view. Uncle is receiving a gift from his brother's son. Brother's son is not relative. If you check this mouse, you will see that for an individual, brother is relative, but brother's son is not relative now. So if he is receiving gift from his brother's son, it is not exempt. But if this brother's son is receiving, just think from individual. I am receiving a gift from my father's brother. Yes, he is my relative, so it is exempt. So remember, always check the bi-sided relationship. I may gift somebody, it might be exempt for him. But if I receive something in return, it might not be exempt. Remember. This was all about exempt gift and taxable gifts. Sorry, exempt gifts. Uncle if taxable if uncle receives from Rahul, exempt if Rahul receives from uncle. Perfect. This was the case. Now we have taxability of gift other than exempt ones. See, we understood what the exempt gift imply. We understood what exempt gift imply. Now, other than exempt gift, whatever the gifts remain, now you have to check any gift that is received otherwise than exempt gift. This is a beautiful point. For example, you will not believe this, but what happened? Uh, you will not believe this. I know you will not believe. This time, when result came, there were many students from our power batch who secured exemption, but they were spread throughout the India. They were spread throughout the India. Out of that students, 200 students, 200, nearly 1,000 students. 1,000? No, 200 students only. 200 students got exemption. You will not believe this. Everybody was so happy with my teaching experience. Everybody was so happy that he wanted to give me some kind of sweet just to make my mouth mouth sweet. They wanted to give me some kind of sweets. But somebody is living in Kerala, somebody is receiving in Guwahati, somebody is receiving in Jaipur, somebody is from Mumbai, somebody is from Delhi, somebody was even from Srinagar. We had a student from Sikkim as well. People were from different places. So what they did, they just transferred me 500 rupees. I can tell you, I can show you the screenshots. People even transferred me rupees so that I can buy mithai, I can buy sweets and feed myself. You will not believe this, but this is what power batch students do. Just out of their happiness, when they pass, they transfer money so that I can eat sweets. You will not believe this. I am saying that you will not believe this. All of a sudden, when I saw my bank account had a balance of rupees 500, my bank account balance was the 500. But 200 people sent me 500 rupees. My bank account surged up to 1 lakh 500 rupees. Oh dear Lord. I'm saying I'm not earning as a teacher. I'm earning just because of respect. This is the respect. Students normally forget faculties. But 200 people sent me 500 rupees just as a gesture. You will not believe. I'm saying that you will not believe. My question to all of you, if I receive this money at free of cost, will it be taxable? Will it be taxable under IFOS head? Will it be taxable under IFOS head? Question is very simple. Every student sent me 500 rupees. 200 students sent me 500 rupees. In total, I received 1 lakh rupees just for sweets. Will this be taxable under IFOS? My question to you, shouldn't this be considered as a business relation? Is it a business relation? Right answer is no, sir. Business relation is only up to classes. I provide you classes and classes are over. But this is your gesture. This is your happiness that you are sharing me 500 rupees. So it is IFOS only, and right answer is yes, it is IFOS. But what if somebody, instead of paying the fees, paid me 1 lakh rupees because of these classes? Just that person want me to succeed, paid me 1 lakh rupees. Provision says it is a gratitude. It would be considered as business receipt. If somebody, for example, Kevana, felt like, wow, sir, the way you are teaching is the best that I have ever seen. I am not giving you just a fees of that the power batch. I am giving you 1 lakh rupees so that you can prosper, so that you can grow. Then it will be considered as business receipt. Okay, sir. Too much of your example. Too much of your example. We got your point. We got your point that whatever money you receive, if that money exceeds 50,000 rupees, then entirely it will be taxable. Entirely such money will be taxable. Second thing, if you receive any kind of movable property, if you receive movable property free of cost and FMV of that movable property exceeds 50,000 rupees, then entire FMV is taxable. For example, I was walking on the road. All of a sudden, a girl came and what he say? He just made me wear a gold chain, and she was gone. I received a gold chain free of cost, and that gold chain is worth 2 lakh rupees. Provision says it is entire FME will be taxable. Sir, how can you think of these examples? Why would somebody on the street uh, will make you wear a gold chain and go? See, my examples, my life, my examples. What if I received that gold chain free of cost? For example, somebody gave me a gold chain of rupees 2 lakh rupees, and in return, he just asked me 50,000 rupees. So I got a benefit of 1.5 lakh. Provision says if you get any asset, if you get any movable asset at lower consideration, at inadequate consideration, and benefit that you are receiving, that means fair market value minus consideration paid exceeds 50,000 rupees, then it is called IFOS. It is taxable under gift. That is rich. That is rich. Neha, you think I am rich? It has been fourth session and I am wearing the same t-shirt. I am wearing same t-shirt. Ideally, I should have come in blazer. I should have come in blazer to take the classes, but I did not. I am wearing a uniform that has been given to me. And you think I am rich? Sir, movable property. If you receive any kind of movable property, if you receive it if you receive it without consideration, then it is. You have to check the FMV. If FMV of that property exceeds 50,000 rupees, then it is taxable entirely. If property is FMV, if you receive it at inadequate consideration, then you have to check whether the benefit that you are getting in gold chain, sir. That is that is still a dream. Somebody just coming on the road wearing me a gold chain and just forgetting about it. It's still a dream. It has never come true. Okay. What I'm saying is, if you receive any if you receive any movable property, that too at inadequate consideration, you have to check how much benefit you are getting. Semi minus consideration, if it exceeds 50,000 rupees, then whatever the difference is will be taxable in your hands. Sir, we got this point. Similarly, for immovable property, for example, I received a immovable property free of cost. Provision says if stamp duty value of the property exceeds 50,000 rupees, then in that case, entire stamp duty value will be taxable under IFOS gift taxation. But sir, if I receive property at a lower cost, for example, stamp duty value of the property is 1 crore. I got the property for 50 lakh rupees. So I got a benefit of 50 lakh rupees. Provision says check whether the benefit exceeds 50,000 rupees. Right answer is yes. Plus also check whether stamp duty value exceeds 110% of consideration. Right answer is yes. If both the conditions are satisfied, then whatever the difference is will be taxed in my hands. So try understanding this, huh? Try understanding this. Try understanding this. Please, please, please try understanding this. If I receive money exceeding 50,000 rupees in a year, it will be taxable in my hands. If I receive movable property free of cost and value of movable property exceeds 50,000 rupees, then it shall be taxed in my hands. If I receive movable property at inadequate consideration, provision says if benefit received, that means FME minus consideration exceeds 50,000 rupees, then it would be taxed in my hands. And similarly for immovable property, if I receive immovable property free of cost and stamp duty value exceeds 50,000 rupees, it will be taxed in my hands. If I receive immovable property at inadequate consideration, then you have to check SDV minus consideration. If it exceeds 50,000 rupees plus SDV exceeds 110% of consideration, then in that case, difference would be taxable in my hands. Everybody clear up to this point? Because this is what the basic provision was. Now I have to get into the details. Now I have to get into the complexities of these provisions. Everybody clear with the basics? Everybody clear with the basics? Yes, sir. First basics of all, what does movable property mean? If somebody gives me a wristwatch, somebody gives me a car, somebody gives me a mobile phone, somebody gives me any such asset, television, these are not movable property. Whatever gifts I receive as movable property, that must be restricted to shares, securities, jewelries, drawing, paintings, sculptures, archaeological collection, any other form of art, bullion or virtual digital asset. These shall only be considered as movable properties. Apart from these, no movable property is taxed. That means if I am receiving car of 1 crore, it is exempt for me, no tax. If I receive a wristwatch of 5 crore rupees, it is exempt, no tax. Only jewelry, painting, only drawing, painting, jewelry, sculpture, archaeological collection, any other form of art, bullion, virtual digital asset, these are only to be taxed. Share securities, drawing, painting, sculptures, archaeological collection, any other form of art, bullion, and virtual digital asset. Share securities, jewelry, drawing, painting, sculptures, archaeological collection, any other form of art, bullion, and virtual digital asset. These things are only movable assets. Apart from these assets, no asset would be taxed. No asset would be taxed. Got this point? Got this point? Next question. Sir, for example, Neha gifted me. Neha gifted me a gold chain of rupees 5 lakh rupees. Neha gifted me a gold chain of 5 lakh rupees. Why would in God's name Neha gift me 5 lakh rupee chain? That is still a question mark. But assume Neha gifted me a chain of 5 lakh rupees and I have a jewelry business. My business is of gold jewelry and Neha gifted me a gold chain. Do you think that this gold chain gift will be taxed in my hands? Do you think that gold chain gift would be taxed in my hands? Arey, no, sir. Why would it be taxed if you have such securities, such movable properties held as a stock in trade? Why would it be taxed? It's your business to acquire things at lower cost. It's your business to acquire things at free of cost. Why would it be taxed in gift? And answer is yes, it would not be taxed. This gives us an important conclusion that if a property has to be taxed under 56 Newton, it must be a capital asset for the recipient. For recipient, person receiving the asset, it should be a capital asset. It should not be stock in trade. Wow, sir. Wow, wow, wow. Wow, sir. Got this point? Two things I told. First of all, movable property only means share securities, jewelry, drawing, painting, sculptures, archaeological collections, any other form of art, bullion, virtual digital assets. These are the only things that are covered under movable property. Second thing, any property received can only be taxed when it is capital asset for the recipient. If it is stock in trade, it would not be taxed. It would not be taxed. Sir, exempt. Sir, exempt, literally exempt. If I receive any gold chain, it would be exempt. Right answer is it would not be exempt. Honestly, it would not be exempt. Let me tell you one picture. For example, this is my P&L. Neha gifted me some gold chain. Neha gifted me a gold chain. Will it be taxable? Right answer is no, it will not be taxable. But will this increase my stock in trade? Yes, sir, it will increase my stock in trade. Sooner or later, I will be selling this. So when I will be selling this, ultimately my sales would go up. This will increase my profit, and this will increase my income. So sooner or later it is going to be taxed, even if it is a business income. But it would not be taxed here. It would be taxed in PGBP. Got this point? Third thing, another important point in this. For example, I am doing a business of, for example, FMCG goods. Or I should say, if I am doing a Kirana business, all of a sudden Neha came. Neha is my supplier. Neha is very happy with the business I do. And Neha came up and made me wear this gold chain. Neha came and made me wear a ring. It would become PGBP. Because this gift has been received on account of business relation. This gift has been received on account of business relation. That means if it is taxable in any other head, it would go in that head. If it is not taxed elsewhere, then only it would go to IFOS. Now we have studied this thing. We have studied this thing in the charging section that if it is not taxed anywhere else, then only it would come here and be taxed. Oh wow, sir. Oh wow, 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 sir. Listen now. It was it is 30th November. This upcoming 31st November. I am getting married. And everybody is invited. Everybody is invited. Everybody. I'm getting married. Everybody is invited. Sarthak sir came. Sarthak sir came to my marriage. He was very happy. He was very happy. Every student who experiences the beauty of DT with us is very happy with the subject. Sarthak sir has tears in his eyes that we have lost a child. We have lost the hera. We have lost a diamond. Because of course, if I get married, timing to this classes would might be affected for 2 or 3 months. 2 or 3 months at least I would take some time off. Of course, when I get married, 1 or 2 months at least I would be taking off. Sarthak sir had tears in his eyes that for 2 months Rahul sir will not be teaching. But despite of those tears, he gave me a gold coin of 10 grams. He was so happy with my performance that he gave me a gold coin of 10 grams as a gesture of happiness. As a gift, he gave me a gold coin. My question to all of you is gold coin received on account of marriage, will that be taxable? Will that be exempt? If taxable, under which head? Will if exempt, under which head? When and what will happen to this? whether it will be taxable under IFRS, whether it will be taxable elsewhere. Will it be exempt? What will happen to this gold coin in my hands? Kevana says it will be exempt. Noted, duly noted, Kevana. Anjana says IFRS. Kevana, Anjana, Neha, and don't worry about it, guys. What's your name? Can you please tell the name? Don't worry about it, guys. I mean, what's your name? Don't worry. Say IFRS. Out of all, Harish came up and says, no, sir, it will be taxable under head salary. IFRS exempt, everybody says. Harish, out of nowhere, says it is salary. Very anti national person, Harish. Very bad. How can you be against the mob? How can you be against the people? If you are against the people, you are against the people of the country. No offense, I'm just taking a standard example of what is done in India. Sir, it is taxable under that salary. It is not taxed under IFOS. It is not exempt under IFOS. It will be taxed under that salary. But sir, he got it in marriage. I got this chain in marriage. Shouldn't this be exempt? Arey Baba, tell me one thing. To be covered under IFOS, the basic premise is it should not be taxed elsewhere. So first premise is to check whether it is taxable under salary. Whether I and Sarthak sir have employee-employer relationship, right answer is yes. As of now, we have. And this gold chain is received because as an employer, he is coming to my wedding. Now, if he wouldn't have been my employer, would I be inviting him in my wedding? Assume no. Assume no. I won't be inviting him to my wedding. If I wouldn't have been his employee, would he be giving me 10 gram of gold? Right answer is no. He is happy with my performance. He is happy with me. That is why he gave me a gold chain. He gave me a gold coin. So there is employee-employer relationship. Therefore, it is considered under that salary. And if it is salary now, we don't even have to look at IFO's angle. We don't have to look at IFO's angle. Got this point? Did you get this point? Right answer is yes, sir. We got your point. We got your point that it is not taxable under IFOS. It would not even be covered under IFOS. Rather, it would be covered under that salary. IFOS is only tested when other heads fail to recognize such income. This is definitely taxable under that salary. So 4 points I told you. Apart from these basic points, I told you 4 points. First of all, movable property has to be any kind of share securities, drawings, paintings, sculptures, archaeological collection, any other form of art. Second thing, what I told you is property has to be capital asset for the recipient. Third thing, it should not be on account of business relation. It should not be on account of employee-employee relationship. Is there any limit? Right answer is Neha. There is no limit. As an employee, I can get anything. I can get shares worth rupees 1,000 crore, 10,000 crore, 1 lakh crore, anything I can get. There is no limit to it. It would be my salary only. So I can get any asset also, like car, mobile, wristwatch. These are not movable properties, so this would always be exempt. Now, sir, my beautiful question to all of you. I received the money. For example, during the year, I received the money for 15,000. I received gold chain, gold coin for 20,000, say. I received shares worth rupees 15,000, 50,000 or 20, I should say 20,000, and I received immovable property worth rupees stamp duty value 20,000. How much would be taxable amount in my hands? How much taxable amount would be in my hands? Question of the day. Whoever correctly answers this would be star in my eyes. Would be star in my eyes. Record from my end, I would gift a dairy milk chocolate, a 40 rupee dairy milk chocolate right away. Right away. You will just message me hi, message me with your number. I will directly transfer 40 rupees in your hands if you are able to tell why and how much amount. Why and how much amount? Two things you have to answer. Why and how much amount? I will be right away sending 40 rupees as a sign of gesture so that you can eat dairy milk from that money. Right away. How much would be taxable in my hands? Piru says nothing. Nothing. Exempt because everything separately considered is not considered. Nothing. Everything exempt. Kevana, 55,000 is taxable. 20,000 rupees immovable property is exempt. Okay. Interesting. Interesting. Harish, zero. Oh, ho, ho, we are having a tie. Any tie would, uh, any tie would distribute the amount. Anjana, aggregate. Anjana says aggregate whatever the total is. Total amount, total tallies to 75,000. It would be tax. Anjana, according to Anjana. Neha, exempt because separately if we consider, it is exempt. Zero. Anybody else who wants to answer? Anybody who wants to answer? Have I written the correct answers as per you? Whatever you have answered, have I written correctly? Is it the case I have is it not the case I have misunderstood? Hevana says, Hevana correct changed her answer. Hevana changed her answer that all 75,000 would be taxable because aggregating all exceeds 50,000 rupees. Aggregating all would be more than 50,000 rupees. Hevana has changed her answer. Okay. Oh dear Lord. Anybody else who wants to answer this question? Even recorded ones, the one who are watching this lecture as recorded lecture, try to answer in the comment box. Try to answer in comment box, and later on you can delete your comment any point of time. I'll not see that if you delete it at all. Now shall I tell? Now shall I tell? Sir, Harish, Anjana, Neha, Tiru, Kevana. Right answer is 55,000 is taxable and 20,000 is exempt. Aggregatedly exceeds 50,000 rupees entirely taxable. What I saw in your original answer. I forgot to change. Right answer is 55,000 would be taxable. Now understand this thing. I'll give you multiple such questions. Okay, in PGBP also we'll have multiple such questions where I will be awarding a dairy milk. Right now, whatever answers you said, I even asked to cross check whether I have written answers properly or not. At that time, maybe I could not see what correct answers are. But leave it. Okay, leave it now. As of now, nobody won the dairy milk. I only won it. But what our solution turns out to be, let's understand that thing. Sir, please repeat the question. Neha, as an individual, I received money of 15,000 rupees during the year. I received gold coin of 20,000 rupees. I received shares worth rupees 20,000 rupees and I received an immovable property. All in all, I got 75,000 worth of gift. How much of this would be taxable under 56(2)(10)? Will it be entirely exempt because each of the asset individually is less than 50,000 rupees? Will it be taxable? Will it be taxable? No, Bijay, this is not the case. Will it be taxable entirely because aggregatively it is exceeding 50,000 rupees? Will it be taxable? Right answer is no. Right answer is you have to check individual limits first thing. Then you have to check aggregate limits of these two. Money and movable property combined should not exceed 50,000 also. And immovable property has to be checked per property wise. What do I mean? Try understanding this. If I got money at once, 15,000 rupees, will it be taxable? Individually, it won't be taxable. I got gold coin 15,000, 10,000 rupees, and then later on I got a gold coin of rupees 10,000 rupees. Will it be taxable? Individually, not. I got shares 20,000 rupees at once. Will it be taxable individually? Not. Will movable property in totality would be taxable individually? It won't be. But if we club money and movable property, this also has to satisfy 50,000 criteria. Will it be taxable? Right answer is yes. Money and movable property cumulatively during the year has to be clubbed to check the limit of 50,000 rupees. But immovable property has to be identified separately. And for immovable property, we have a special feature that if we receive immovable property 20,000 rupees, it is not taxable. If we got another 20,000 property, again it is not taxable. If we get another 20,000 property, again it is not taxable. If we got five properties now, still it would not be taxable. Immovable property has to be checked property wise, not annual wise. Immovable property has to be checked property wise. Every property has to be examined, not aggregate properties. Not aggregate properties. Otherwise, in these assets, we have to check aggregate for the. This is the special point, and I'm 100% sure that you are not aware about this. Kevin says, sir, in exam, I get confused this way. First, I think and then change the answer and get no marks. How do I work on this? First of all, stick to what you say. You are correct at first. Second thing, multiple revisions would help. Would help. Multiple revisions can only help. First of all, conceptual clarity has to be there that you are getting with the sessions. Reading it multiple times, at least 2 to 3 times, one time with class, 2 times apart from class, it would help you to retain everything. You will be able to recall. Just try revisions multiple times. Neha, money plus gold individually and collective as well. Money plus gold individually, collective as well throughout the year. But immovable property has to be checked per property wise. If one property I'm getting 20,000, two property I'm getting 20,000, three property I'm getting 20,000 rupees, it would still be exempt because individually every property that I receive has to be less than 20,000 rupees. Let me vouch it for you. If you want, I can vouch it for you. Whatever I am saying, whatever I am saying is not because of my will. This is what the act says. Let me take you through the act if you want, if you allow me. Have a look at this point. Have a look at this act. Section 56, subsection 2, clause 10. Where any person in any previous year from any person or any other on or after 1st April 2017 receives money without consideration aggregatively exceeds 50,000 rupees, receives any movable property without consideration exceeding 50,000 rupees, sorry, received any immovable property for a consideration exceeding, ठीक है, exceeding 50,000 rupees. Okay, where was it? It was written somewhere. Whereas any asset other than immovable property includes movable property plus cash without consideration aggregate market value exceeds 50,000 rupees for the whole of such year for a consideration which is less than aggregate market value, ठीक है. This point clearly states that any property other than immovable property has to be considered for the limit of 50,000 rupees. Any property other than immovable property has to be considered. Other than immovable property includes cash, includes movable property as well. And if we consider the immovable property provision, you will see there was a clause, if I am not mistaken, there is a clause given immovable property. See, any immovable property without consideration the stamp duty value of which exceeds 50,000 rupees of such property is only there. It is not talking about total aggregate of the all the properties. It is saying whenever you receive any immovable property, you have to check for that property only. If you receive three properties differently, you don't have to check 50, you don't have to check aggregatively. Of such property only has to be seen. This is the interpretation that you will not get in any book. So if you want to write it in a book, just write it down. The consideration of stamp duty value of such property exceeds the consideration of the amount exceeds the following amounts. Second, 50,000 rupees or 10% of the concession. This is the condition that we told. 10% of SDV has to be there. Second thing, difference has to be exceeding 50,000 rupees. But this is per property wise. You have to check. You don't have to club the considerations throughout the. You don't have to club that. Got this point? Got it, sir. We got your point. We got your point, sir. We got what you want to say. So what multiple things I told you about gift taxation? First of all, money received exceeding 15,000, 50,000 would be taxable. Movable property exceeding 50,000 free of cost taxable. Movable property benefit received at inadequate consideration, benefit exceeds 50,000 rupees, it would be taxable. Immovable property SDV exceeding 50,000 rupees, it would be taxable. Immovable property received at inadequate consideration, we have to check two things. SDV exceeds 110% of consideration, and second thing, SDV minus consideration exceeds 50,000 rupees. In both the cases, if both the cases are satisfied, then difference would be taxable. These are basic four conditions. Then we have to check basic five conditions. Then we have to check what is a movable property. Movable property implies any kind of shares, securities, drawings, paintings, sculptures, archaeological collection, any other form of art, and bullion. This is what is meant by movable property. Second thing, whatever assets you receive have to be capital asset for you. Third thing, it should not be on account of business relation. Fourth account, it should not be on account of employee-employee relationship. Fifth thing, sir, individually 50,000 limit has to be checked. But for movable property and for cash, collectively also you have to check the 50,000 limit. But for immovable property, you have to check limit as per asset basis you have to check. Did you get the point? Everything what I taught has been summarized in these 5 lines. Per limit, per asset you have to check. See, there are certain assets there are certain things which might appear as gift as per 56(2)(10 but are exempted from tax. What does that mean? Try understanding this. See, if you remember few years back, Yes Bank was falling too much, that too much of investors' money, too much of public money was at stake. So what happened? Government tried to bring investors in Yes Bank. Government tried to offer shares of Yes Bank at a very lower price so that investors are attracted and Yes Bank could be revived. For that matter, share price of Yes Bank were offered at a very lower price. Just 1 minute, Neha, a break. Just 1 to 2 minutes give me, I will be giving a break. What did I just say? Shares of Yes Bank were given at a very lower price. because of which people had gift implications in their hands. For example, Yes Bank was trading at rupees 20 rupees. Government offered offered share of Yes Bank at 14. So every shareholder used to buy got a benefit of 6 rupees. Now, if a person is buying 10,000 shares, he got a benefit of 60,000 rupees. Provision says this would not attract 56 to 10. Any shares of Yes Bank received on account of restructuring drive would not attract 56 to 10. Second thing, any shares, if you, for example, if any of the companies there or subsidiary company, their board of director has been suspended by NCLT. Provision says if you receive any such company share, even if you get a lower, if you get these shares at a lower price than market value, now still 56 to 10 would not be applicable because these are dead companies. If in company board of director has been suspended, that means that company can trade at any value. Third thing, if for example, if government does any kind of strategic disinvestment in any company, for example, government did strategic disinvestment in Air India. In Air India, government did some strategic disinvestment. Now, in that case, if if shares of Air India are received to you at a very lower cost, then 56 to 10 would not arise. This completes your 56 to 10 base majorly. Now we'll have a break. It is 9:48. Break till 10:10 plus minus 2 minutes. Take break. Do not use mobile phone during the break. We'll see you guys after the break. We'll complete this chapter. Only small topic of this chapter is left. After other apart from that, everything is over. Remember, if you will not read this today, now you will forget everything what I said. If you will not read whatever I told you, you are going to forget. Those who have not read capital gain, try reading it at home today. Right now, we are having a break. After break, we'll complete and continue. After 10:10, even after 2 or 3 minutes, you can start. We'll start at 10:15. We'll start at 10:15. I'm giving you time, extra time to take a break. See you guys after the break. So guys, welcome back. Are you all back from break? Now, what messages we have during the break? So try registering for the session now. Price shows 2000 rupees. Before it's 18. Before it was 1800. Is there any coupon code? Right now, as of now, there is no coupon code. I have been talking to sir. He's yet to reply whether can we have a discount or not. I will be sending him the message today only. Today I will be sharing a message in my Telegram channel. If available, if we have discount available, I will be sharing on the Telegram channel. If not, then too I will be sharing. Okay. Whatever the case is, I will be sharing. Honestly, I will be sharing. If anything I can do, I would do. Sir, we are back from break. One thing, I have sent mail regarding English batch. I have given in the ID given, sir. Perfect, Anjana. You will be getting the access for English batch only. Don't worry. Now, sir, before going to break, we understood how gift taxation works. We understood whenever we receive money as a gift, whenever we receive movable property as gift, whenever we receive immovable property as gift. Before, apart from that, we also understood that what is a movable property. We also understood that gift is only taxable when it is received as capital asset. We also understood that it is there are certain few considerations to be taken, that it has to be other than employee-employee relationship, it has to be other than business relationship, then only it is taxable. And at last we understood that movable property plus immovable property 50,000 limit has to be satisfied. But in case of movable property plus cash 50,000 is to be satisfied. But in case of immovable property, every asset has to be separately assessed. Now we have to come for immovable property, transfer of immovable property, sale of immovable property or gifting of immovable property. This is what we have to study. Whenever there is immovable property given, multiple scenarios come into picture. Let me tell you how. For example, this is Rahul and this is, say, Kishore. Try understanding the provisions, you will be able to answer every provision. Try understanding this. Okay? Rahul has immovable property. Immovable property held as capital asset. I gifted this property to Kishore. Gifted. I gifted this property to Kishore. Kishore received that. And he also holds such property as capital asset. For Kishore also this property is capital asset. For both of them it is capital asset. What would be tax consequences in the hands of Rahul and what would be tax consequences in the hands of Kishore? I want you all to answer. See, there will be 8 cases. I want very active, very aggressive answering from everybody of you. For Rahul it was capital asset. For Kishore also it is capital asset. Rahul gave this property free of cost. What would be tax implication in the hands of Rahul and what would be tax implication in the hands of Kishore? Okay, shall I tell this one? Shall I tell this one so that second answer you can continue? Sir, for Rahul, since it was capital asset, for Rahul, since this asset was capital asset, Rahul, it will be exempt. Yes. As Vaishnav said, Rahul, it will be exempt because as per section 47, if I gift any house, it would be exempt. If I gift any house free of cost, it is exempt as a capital asset. If I gift this house to somebody else, it would be exempt in my hands. But recipient would be charged to tax under section 56 to 10, whatever the SDV of the house that would be charged in the hands of the Kishore. Assuming we are not relatives. Perfect. Beautiful answer, Vaishnav. Neha, it is exempt in the hands of the Rahul. It will be taxable in the hands of the Kishore. Changing the case. Rahul had a mole property held as capital asset. It was given to Kishore. received by Kishore as capital asset, but Rahul gave it for inadequate consideration. Rahul gave this asset for inadequate consideration. What would be tax treatments in the hands of Rahul and what would be tax treatments in the hands of Kishore? What would be tax treatments in the hands of Kishore? Oh dear. What would be tax treatment in the hands of Kishore? And Rahul as well. Sir, whenever you give any asset at an inadequate consideration, whenever you give an asset at a lower consideration, a section comes into picture, that is 50C, which says if you give any asset at a price lower than SDV, then SDV shall be considered as full value of consideration and capital gain would be leviable in my hands. And for Kishore, since he received the asset free of cost or let at a lower cost, the benefit would be taxable under 56 to 10. Benefit would be taxable under 56 to 10. Clear to everybody? Clear to everybody? Clear to everybody? Okay, sir. Clear. Clear, sir. Clear. Case number 3. Rahul has immovable property held as stock in trade. He gave up the property to Kishore, and for Kishore, it is still a capital asset. He gifted this property. Now, question has changed. See, I have not taught you one section. I have not taught you one section. One section exists, that is 43CA. Let me tell you picture. 43CA is applicable to builders or real estate developers. This section specifically says that if you are a real estate developer, you cannot give your property for free of cost or inadequate cost. Neither can you give it at free of cost, nor you can give it at inadequate cost. What would happen? A section would be invoked which says if SDV exceeds 110% of consideration, then SDV would be consideration. Or otherwise, if SDV is less than 110%, less than equal to 110% of consideration, then in that case, consideration would be full value of consideration for your PGBP. This section is applicable for builders. So as per 40, it is as good as 50C. It is as good as 50C, but this is applicable to real estate developers who held investment, who held these buildings as a stock in trade. And second thing, it applies to PGBP. Now question is Rahul holds immovable property as a stock in trade. He gifted this property to Kishore who held this property as capital asset. What would be tax treatment in the hands of Rahul and what would be tax treatment in the hands of Kishore? Neha says for Rahul it will be PGBP. Yes, it will be PGBP. How much PGBP? Stamp duty value will be full value of consider full PGBP for me. What would be treatment in the hands of Kishore? Arey Baba, what would be the cost of acquisition in the hands of Kishore? Rahul PGBP and Kishore's IFOS. See, Kishore hold this asset as capital asset. Anything received at free of cost or inadequate cost, it would be 56 to 10. Stamp duty value will be IF gift. Beautiful, 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 Anjana. Again, case change. Case number 4. Again, Rahul holds this property as a immovable property held as a stock in trade. He gave this property to Kishore, who holds it as capital asset, but he has given it at inadequate consideration. At inadequate consideration. What would be treatment in the case of Rahul? Sir, it is simple. If you hold it as stock in trade, again PGBP would come, 43CA would come in picture, and whatever the stamp duty values would be considered as your PGBP. For recipient, answer remains same. If at inadequate consideration, whatever the differences would be taxable in your hands. This is simple provision. Whatever you said, as say as it is would apply. Are you able to understand what I'm saying, or are you just agreeing to me? What are you just agreeing to me? Perfect, Vaishnav. Perfect, perfect, Vaishnav. Now changing the case. This is Rahul and this is Kishore. Beautiful Anjana, beautiful, beautiful, beautiful Anjana, beautiful Khevana. Rahul has immovable property and as capital asset, but Kishore received this property as stock in trade and Rahul gifted this property. What would be tax treatment in the both hands? What would be tax treatment in both hands? What would be tax treatment in both hands? This is the answer that I want everybody to say. Everybody should say. Everybody should answer this. Sir, sir, immovable property. If it has been gifted, provisions of section 47 would apply, which clearly state that if you gift out any capital asset, it would be exempt. If you receive stock in trade as free of cost, Ari Baba, it is your business not to acquire property as free of cost. So in this case, no treatment, no treatment. Did you got this? Did you understand what we did in this case? What we did in this case? Did you understand what we did in this case? Sir, do not correlate things. Just think of independent point of view. Rahul holds as capital asset. Go to provisions of capital gain. Go to provisions of capital gain. If we assume provisions of capital gain, we just need to know whether it is exempt transfer or taxable transfer. Arey Baba, if I'm giving it at free of cost, it is exempt transfer. Section 47 says it is exempt, so it is exempt in my hands. From recipient point of view, recipient, is it capital asset? It will be IFOS. Is it stock in trade? It will be PGBP. I am holding it as stock in trade as a recipient. If it is recipient, no tax treatment. Oh wow. Again changing the scenario. Rahul hold this property as immovable property as capital asset. Kishore hold received this property as stock in trade, but this time Rahul gave it at inadequate consideration. Rahul received this property, so Rahul gave this property at inadequate consideration. What treatment would arise? Sir, simple. If you hold it as capital asset, then section 50C would apply. Your stamp duty value will be full value of consideration. And for recipient, no treatment. Similarly, last two questions. Rahul hold this immovable property as stock in trade. Kishore hold this property, immovable property as stock in trade. What would happen if it is given at inadequate or if it is given at free or if it is given at inadequate consideration? In both the cases, answer would remain same. For stock in trade, 43 CA would apply, and for recipient, nothing will do. Almost we understood 8 points, sir, but it was too much for us. We could not process what you said. So can I just draw an example from the viewpoint of the transferor? From the viewpoint of transferee, if transferor hold them as capital asset or transfer hold them as stock in trade, Similarly, just think, I'm trying to answer every possible case. Rahul, hold the capital asset, gave for free. If I hold the capital asset, if I gave it for free, it was exempt transfer, section 47. If I gave it for inadequate consideration, 50C applied. Holding a stock in trade, even if I give it free of cost or even if I give it inadequate consideration, 43 CA would apply and SDV would be full value of consideration. Receiving a stock in trade, if I receive for free, then SDV would become 56 to 10. No, no, Kishore. If they are relatives, for if they are relatives for transferor, it will not change. For transfer, it will not change. For transferee, treatment will change. If transferee hold it as capital asset, it would be exempt. If he hold it as stock in trade, no treatment would apply. Capital if transferee, yani recipient holds it as capital asset free of cost received SDV, inadequate consideration, then difference would be taxable. Difference under 56 to 10. If transferee holds it as stock in trade, no treatment. This is how do we summarize the entire topic. This is how do we summarize the entire topic. Whatever 8 adjustments we took, this is the entire chart. Sir, do we have to draw this? See, if you have my book, then I have already mentioned this chart for you. Where is it? What if you have my book? I have already mentioned this chart in front of you. Okay? You already have this chart in your book. You don't have to write down anything. But if you don't have my book, you can take a screenshot of this, write it down in your book so that in case you see this question, you are able to answer. But IFOS has not been tested this too much. In past few attempts, I can say IFOS has not been tested that much at final level. So this is not a relatively important topic. Super. Perfect. Now, a later step. Anybody having any doubt up to this point? Kishore or Kishore, I answered your question. Anybody having any doubt to this point or in this point? Otherwise, we can proceed further. Anybody having any doubt? Anybody having any doubt? Sir, as such, no doubt. As such, no doubt. You can proceed further. But I would like to request something differently. I would like to raise a question. Wait, Neha. Wait. Wait, Neha. Hold on for a second. Till now, everybody has asked only two questions. One question was relating to deemed dividend. The other question is this thing only. Neha, I got your point. Wait for 2 minutes. Huh. My question to all of you is whenever recipient receives the gift, whenever recipient receives the gift, recipient holds them as capital asset, received free, received for inadequate consideration. Recipient holds such asset as stock in trade. Then what would be cost of acquisition for the recipient? If the recipient further sells the asset, what would be the cost of acquisition of this asset? For that matter, I have drawn simple chart. Provision says in case transferee was not assessed to tax under 56 to 10, cost of acquisition would be transferor. What does that mean? See, for example, if tax was levied in this transaction, if tax was levied in this transaction, for example, transferee received the asset free of cost and he paid tax on SDV, then in that case, whatever SDV he paid, that will be the cost of acquisition. In case Transferee was taxed on inadequate consideration, then SDV would be considered as cost of acquisition. But sir, if transferee received this asset of free of cost, that may on account of gift from a relative, then in that case, cost of acquisition of previous owner shall be taken. But in case it is held as stock in trade, then whatever price paid to acquire that asset would become cost of acquisition. What did I just say? In case it is held as stock in trade, price paid would be considered as cost of acquisition. But in case it is held as capital asset, remember, if transfer is being taxed at any point now, so SDV would be considered as cost of acquisition. But if transfer is not taxed, for example, he got this asset from his brother, whereby no capital gain was implied, no IFOS was implied, in that case, cost of acquisition of the previous owner shall be taken. This is the entire sum of the entire topic. We are done with the topic. Just come to question answers. Question answer number 12, Mr. Hari. What does this question says? Mr. Hari is a property dealer. Neha, this is the question which you are asking. I know what difficulty students face. So for that matter, we have both the questions in our case. Hari is a property dealer. That means, can I say that immovable property held by him will be stock in trade? Right answer is yes, it would be stock in trade for Mr. Hari. Sold a building in course of the business to his friend Mr. Rajesh, who is a dealer in automotive parts for 90 lakh rupees. Hari is a property dealer and Mr. Rajesh, the automotive dealer, auto parts dealer. That means for Hari it is stock in trade, for Rajesh it is capital asset. Hari sold this building for 90 lakh rupees. On 1st April 2024, the stamp duty value was 150. Sales consideration is 90. Stamp duty value is 150. Oh dear Lord. Agreement was, however, entered on 1st September 2023, where stamp duty value was 140. Hari received down payment of 15 lakh rupees on cross check and Rajesh on the date of agreement. See, agreement date was 1st September 2023. On that day, SDV was 140. On registration date, SDV on 1st April 2024, SDV was 150. On agreement date, payment was received through cross check. Cross check does not amount to any payment. In that case, SDV on the date of registration date would be taken. For that matter, SDV would be 150 only in our case. Discuss the tax implication in the hands of Hari and Rajesh. Assume that Hari had purchased the building for 75 lakh rupees in July 2023. Hari had purchased in July 23rd July, 23rd July it was? 12th July 2023. He had purchased this property. Just to think of from Hari's point of view. Hari holds this property as a stock in trade. He holds this property as stock in trade. His stamp duty value is 150, but he's selling at just 90 lakh rupees. From a seller who holds this property as a stock in trade, a section is invoked, section 43 CA. Yes, as Neha said, PGBP. A section is invoked, that is 43 CA, which clearly states that you cannot sell property below SDV. Here he is selling. Don't you think that PGBP would become 150? Cost of acquisition was 75 lakh. That means 75 lakh would be his PGBP income. For Hari, 75 lakh would be PGBP income. Are you able to understand? Are you able to recollect what we had studied? Correlate. Are you able to correlate these things? Think of from Rajesh's point of view. Rajesh hold this asset as capital asset. From recipient point of view, I am getting a property whose SDV is 150 lakh rupees, whose cost of acquisition is 90 lakh rupees. That means, don't you think that I am getting this property at a very lower cost? Very lower cost I am getting. Sir, two conditions are to be checked. Difference has to be greater than 50 lakh or 50,000 rupees. Difference is 60 lakh. Plus, whether SDV is greater than 110% of consideration. Yes, it is exceeding 110% of consideration. That means difference of 60 lakh rupees would become taxable under 56(2)(10). Oh, that means what treatment award solution turns out to be for Hari, PGPP 75 lakh rupees, and for Rajesh, 60 lakh would be 56(2)(10) gift. Let me show answers. Therefore, 75 lakh being the difference between the stamp duty value would be business income. And second thing, 60 lakh rupees for Rajesh would be 56 to 10 in the hands of the Rajesh. And all the extra knowledge they have given that since SDV, no payment was made on the date of agreement, therefore SDV was taken. Multiple angles which SDV is taken, multiple gyan they have given. I hope you understood how calculation is made. But answer is not over. Answer is not over. Would your answer be different if Hari was a share broker instead of property dealer? Let's reassume that Hari is a share broker. If he is a share broker, then this property would not be stock in trade for him. This property would be capital asset for him. And he is holding a capital asset. He is selling a capital asset whose SDV is 150, but sales is 90 lakh rupees. That means, can I say a different provision that is 50C would be invoked in this case? And as 50C would invoke, again, his full value of consideration would be 150. His cost of acquisition would be 75 lakh rupees, and he would have 75 lakh rupees as short term capital gain. He will have a short term capital gain of 75 lakh rupees. For Rajesh, answer would not change. Answer would not change. Recipient is same. Beautiful Kevna, beautiful Neha, beautiful Vaishnav. It is absolutely correct that only change will happen in the hands of the Hari, who is the seller. Ultimately, he was being taxed under PGP once. Now he will be taxed under capital gain. Capital gain will be short term because he is holding this asset for less than 2 years. How answer change? In the hands of Rajesh, there would be no difference in the treatment. No difference. 60 lakh would be again taxed in the hands of the Rajesh in under the head IFOS. But in Hari, if you see 75 lakh rupees being the difference, would be taxed as short-term capital gain. This is what this provision is all about. I hope you understood the provision. I had only two questions in IFOS, and I know what was the area where people will do the mistake. Anjana, why Hari 75 lakh? Why not 90? Anjana, listen, Hari is the seller. Hari is the seller. And for seller, only thing we determine with 50C is full value of consideration. So full value of consideration will not be 90, rather it will be 150. But cost of acquisition, 75 here na. Cost of acquisition is for 75 only. So for that matter, capital gain will be 75. Anjana, why not 90? You are comparing full value of consideration with SDV. We don't have to do full value of consideration has to be compared with cost of acquisition for capital gain. Basic basic pointer. Anjana, got my point. Full value of consideration has to be compared with cost of acquisition, no? Sir, 43 CA, right? Perfect. This was the question. Neha, did you get this point? Did you understood? Was this the only question you want to ask? See, this has been a part of Super 100. So you can have a strong belief that whatever questions that I have mentioned in Super 100 now are not just those questions that have been tested in exam, but these are those questions where you find something or the other tricky. Where most of the concepts are covered, where most of the things are covered, you can rely on the Super 100, and the Super 100 are completely comprehensive. They represent what is being asked in exam. So you can rely on these questions. Yes, sir, clear. Even I can give you this privilege. I can give you this privilege. If this is only for our batch students, I am not telling to anybody else. Okay. If you want, if you want, I'm again saying, if you want, sir, tell now, why are you making us wait? If you want, sir, if you want, you can cut this point down. You can cut this point down, and you just have to practice that question that we have done. Ignore this entire concept. See, this concept takes time, like we gave time right now. During exam, you might not have this much time. If you want to cover this point now, instead of doing, you can just practice the question. Practice Hari wala question. That would be okay. That would be more than sufficient. It's okay for you to do that question only instead of understanding the entire concept. That completes our all the incomes. Sir, whenever whenever you have IFOS income, against that IFOS income, multiple deductions are allowed. Like we understood while computing the rent from plant and machinery, any depreciation, any insurance, any repairs is being reduced. Similarly, if you paid any expense to earn interest income, that can be reduced. If you paid any if you paid any expenditure to earn any kind of income, if that expenditure is directly attributable, that is allowed expenditure, no issue whatsoever. If you have paid any expenditure to earn any income, it is allowed expenditure, no issue whatsoever. Remember, any expenditure which is wholly and exclusively to earn such income, it is allowed. Remember, you should not do capital expenditure, that should not be allowed under 57, but remaining all the expenditures are allowed. In family pension also, we understood that one third of the family pension of 15,000 is allowed, whatever is lower is allowed, we understood. Any expenditure incurred solely for the purpose of earning that IFRS income is allowed under 57. Second thing, interest on compulsory acquisition. If you remember, whatever income that we have earned on account of interest on compulsory acquisition taking place, we receive compensation. If we receive late compensation, we earn interest. 50% is allowed on such interest that we got. Third thing, sir, right now we don't need to stress this point. For third thing, we don't need to stress. I will be stretching this when I will be teaching deduction and ATM. If you earn any interest, if you earn any interest expenditure, sorry, if you earn any dividend income, what this point says, if you earn any dividend income, then expenditure is allowed only on interest expenditure. Only on interest expense is allowed. Dividend income, against that only interest expenditure is allowed, and that too up to a limit. See, if you want to earn dividend, if you have earned a dividend, normally no expenditure against dividend is allowed. Normally, no expenditure against dividend is allowed, but only one expenditure is allowed, that is interest, and that too up to 20% of dividend. For example, we have earned dividend of 100 lakh rupees and we have paid 40 lakh rupees of interest to earn that dividend. How much dividend would be taxable? Provision clearly states that take dividend as IFOS income minus section 57. How much interest would be allowed? 20% of 100. That would mean 20 lakh would be allowed. That would be the amount of interest that can be claimed as deduction against this dividend income. Only 20% of the dividend is allowed as deduction. Sir, here is an important catch that deduction will not be allowed against the dividend which is falling under 222F. Deduction will be allowed against every dividend. Normally, interim dividend allowed deduction, interest expenditure allowed deduction, final dividend allowed, deemed dividend allowed, but not deemed dividend referred under section 222F. Against this dividend, you will not be allowed any interest expenditure. Remember, if you receive dividend from foreign company, again still it is allowed. If you receive dividend from business trust, it will still be allowed. But if you receive any dividend on account of 222F, it will not be allowed. Let me take one example to illustrate. For example, I received a dividend. I received a dividend. Say for example, I received a dividend TCS of rupees of 10 lakh from TCS, 5 lakh from business trust, 5 lakh from foreign company, and 5 lakh, 5 lakh nahi, 12 lakh from buyback. And I paid interest, 10 lakh I paid interest. Can anybody with the given explanation calculate how much deduction on interest, how much in deduction of interest we will be allowed? We earned this much dividend. How much interest would be allowed against this dividend? How much interest expenditure would be allowed against this income? Sir, take all the dividends, 10 lakh plus 5 lakh plus 5 lakh. plus 12 lakh. So total dividend receipts are 32 lakh rupees. Perfect. While considering section 57, 20% of dividend, while considering 20%, we have to take 10 lakh plus 5 lakh plus 5 lakh. Here we don't have to take 12 lakh. In that case, how much it turns out to be 4 lakh. Our paid interest is 10 lakh, whichever is lower. 4 lakh would be allowed as deduction. This implies that 28 lakh will be taxable. Beautiful Harish, beautiful Neha, beautiful Vaishnav, beautiful Anjana. Well done. Very well done. Very well done. You got the point. You got the point. If you permit, if you permit, shall I twist this question a bit more? If you permit, shall I permit this question a bit more? Shall I permit? Shall I twist it? Shall I permit? If you permit, shall I twist this question? Yes, sir, you can do. Yes, sir, you can do. Okay, okay, okay. Chalo, perfect. Facts of the question remain same. Interest earned is 10 lakh, 5 lakh, 5 lakh, 12 lakh. Interest earned remain the same. 10 lakh, 5 lakh, 5 lakh, 12 lakh. Out of this 12 lakh is deemed dividend. But interest paid is also same 10 lakh. But here is a catch. What catch? Interest paid to earn TCS dividend is 3 lakh. Interest paid to earn this business trust dividend is just 50,000. Interest paid to earn this foreign company's dividend is 0. Interest paid to earn this deemed dividend is 7.5 lakh. You have been given an internal split as to how much interest is paid to earn which dividend. You have been given. Now calculate how much interest would be allowed to. Now you have to calculate how much interest would be allowed to you. Vaishnav says 3.5 lakh. Neha says the same answer. How did you do this question? How did you do this question? Let me tell you how you did this question. What you did, you took all these three, 20 lakh, multiplied 20% to this, that means 4 lakh. You paid totality. You paid totality 3.5 lakh for this, and you said whichever is lower. This is how you did. This is how you did. And how Kevana did this question. Let me tell you how Kevana did this question. TCS, 10 lakh dividend. 20% of this would be 2 lakh. Business trust, 20% of this would be 50,000. Foreign company, I have paid no interest, so no. Kevana said 2.5 lakh. Harish says 4 lakh, no issue. Harish changed his answer to 3.5. First of all, this is very clear that any interest paid for the purpose of deemed dividend has to be ignored. Always has to be ignored because that is not relevant to us. Second thing, is this 3.5 correct or is it 2.5 correct? Right answer is, sir, ICI corrects both of them. Even you can correct, you can do individual dividend, take 20% of that and take how much expenditure has been paid. You can do collectively. You can even do aggregate. In September 25, I guess, no, in May 25, this question was asked. First MCQ was asked on this question. ICI has corrected both the answer. If you take the cumulative approach, then too you are correct. If you do individual approach, then too you are correct. Both the answers are correct. Wow, sir. Wow. Amazing, amazing. See, why did I tell? Because there are students who might think I have done individual approach. Will that be correct? It is correct. Because if everybody would have given 3.5, I would have said 3.5 is the correct answer. But if somebody is giving 2.5 now, he should also be respected, and that is also correct answer. This asked question. Okay. See, the level we are studying now, remember, examiner normally does not touches this kind of level, but okay. Section 58, what it says, expenses that are not allowed as deduction. Expenses that are not allowed as deduction. See, in section 57, we are said that if we earn any IFRS income, any expenditure incurred to earn that dividend is allowed. But these expenditures should be taken care of with some things now. That any personal expenditure should not be allowed as deduction. Second thing, if any payment is made on which TDS was required to be deducted TDS, otherwise 30% of that sum would be disallowed, or 100% of that sum would be disallowed. If you are making any expenditure, do not make 10,000 exceeding expenditure in cash. Otherwise, 40A3 will apply and it will be disallowed. And if you are earning any, if you are doing any expenditure on casual income implies lottery income. You earn lottery income, for example, 1 crore. And for earning that lottery, you paid too much of amount for the tickets. You made too much amount for the commission purpose. You made too much amount for rishwat or bribe. In that case, such expenditure would not be allowed. Or last thing, any expenditure shall not be allowed for buyback. Any expenditure shall not be allowed for buyback income. Last thing, last case. What this says. For example, if you are a lottery dealer, your business is to sell the lotteries, and all of a sudden you were not able to sell the total lotteries. A few lotteries were unsold, lottery tickets were unsold, and out of those unsold lottery, you won lottery of 7 crore. Will this lottery income be considered as your IFRS income or your PGBP income? Question is very simple, that if you have unsold lottery tickets and you won one of the lottery out of those unsold tickets, will the lottery income be your business income or will it be your IFOS income? Last question of the day. Sir, PGBP, Vaishnav says PGBP. Right answer is no, it will always be IFOS income. Why it will be IFOS income? Because it is not my business to earn from lottery. My business is to get commission on account of lottery. And this is what said by Kerala High Court in case of Manju and Company. Because my business is not to earn from lottery now. It is just a coincidence. It's just a luck that we got earning from the lottery. Rather, our business is to earn commission on the sale of lottery now. So commission business is a business. But if you win any kind of lottery out of unsold tickets, now it is not your business. It is your casual income only. It is not always that you win. It is once in a lifetime you won. So it is just a game of chance. It is considered as lottery only. It is considered as IFOS income. It is not PGPP. This was the judgment given in case of Manju and Company, Kerala High Court. Need not to remember this name, but just as important that leftover tickets, winning lottery, even if you have business of selling lottery, you don't have a business of winning the lottery now. You don't have business of scratching the lottery and trying for the numbers. Your business is to just sell. So selling would be PGBP, but lottery would be IFOS. That completes your IFOS chapter. We have also already done the question answers of IFOS. I want you all to come towards one of the question that was left. One of the question that was that I gave you as a homework. Many people gave me the solution. Few of them were correct, few of them were incorrect, but presentation everybody almost did correctly. Every presentation that I saw was almost correct. I will show you the presentation today also. Let me tell you how this question has been approached. Question number 6 of Super 100. As a today's DPQ, question number 9, Manan. Of the same PDF, question number 9, Manan 1. This question would require your basic non-resident taxation knowledge. As to which people become Indian resident, which people become non-resident, your basic knowledge of NR taxation would be tested. Not depth knowledge, but only basic knowledge would be tested. That would be very important for you. Try solving that question. This is a beautiful, beautiful, beautiful question. Try solving. This is your DPQ for today. Question number 9. Perfect. 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 Yes, sir. Got it. Come to question number 6. Mr. Sanjay, yesterday this question was yesterday's homework. We have completed IFOS. We are moving on towards question answers of capital gain that were left yesterday. If I show you the planner as to how we have to proceed, as per our planner, we are well on time. We are well on time. If time remains, we will start PGP today only. Mr. Sanjay, try understanding this question. This question is very beautiful question. Very, very, very beautiful question that one can ever see. Okay. Mr. Sanjay is a resident in India, age 55. He has an impressive investment portfolio in various mutual funds. Multiple mutual fund he has. He has impressive portfolio. He redeemed the entire mutual fund portfolio and bought the villa in Lonavala for 2 crore rupees and spent the life there. Such a beautiful life. Earn till 55, earn in mutual fund till 55, sell those mutual fund, buy a house in the outskirt and stay there, like stay your luxurious life there. Such a beautiful life Mr. Sanjay has. But we have to do his calculation work. Now, can you recall one thing? Can you recall one thing? Sale of mutual funds and buying more property in return. Can you recall section 54 exemption here? Section 54 is being revisited here. Exemption under section 54 is revisited here. How calculation will be done? Let me tell you. We have four mutual funds. Before reading four mutual funds, we have some points given. For mutual fund number A and B, 1 or 2, I have invested 30% of their 30% of their proceeds in domestic company, and funds have 3 and 4 have invested 70% of their proceeds in equity shares of the domestic company. Third and fourth have invested 70% of their proceeds in listed equity shares of domestic company. Can I simply say that these are equity oriented mutual funds? Can I say these two are equity oriented mutual funds? This is also equity oriented. This is also equity oriented. Both of them are equity oriented. Yes, sir, they both are equity oriented. The investment pattern of the funds remain unchanged over all the years. Okay. Unit number one and two, fund number one and two, they seem to be debt oriented. If you look at them carefully, they seem to be debt oriented. But sir, unit one, fund number one is very old, so it is absolutely debt oriented mutual fund. But fund number two, it invests 30% of their securities in listed equity shares. That means, can I say it is a specified mutual fund? 50 double is specified mutual fund. Can I say special second mutual fund is specified mutual fund? We have studied section 50 double A. Specified mutual fund imply any mutual fund which has less than 35% proceeds in equity shares. Second thing, it should be issued after 1st April 2023. This fund is issued after 1st April 2023. That means this is specified mutual fund. Sir, we got that point. Try understanding this question. You will enjoy this question to the fullest. Question number one, it is question number one, it is debt oriented mutual fund. It was acquired on 3rd April 2021 and it was sold on 5th June 2024. First of all, tell me one thing. As per date of sale, can you say is it sold before budget or after budget? Sir, it is sold before budget. If it is sold before budget, then period of holding has to be checked. Old period of holding has to be checked. And for debt-oriented mutual fund, we used to check 3-year period of holding. If you remember, 3-year period of holding was applicable. So 3 year of period of holding, checking this. Yes, it is being held for 3 years. That means, can I say it is long-term capital gain? It is long-term capital asset. Since it is sold before budget, can I say indexation would be given? Right answer is yes, sir. Indexation would be given. Since it is sold before budget, can I say tax rate 20% would apply? Huh, sir, 20% tax rate would apply. I told you the date of transfer is important to determine period of holding. Date of transfer is important to determine indexation, and date of transfer is important to determine the tax rate. Three things are important with date of transfer. How much capital gain would arise? See, full value of consideration is 140. It is not under 50 double A. Yes, it is not under 50 double A. 50 double A is always short term. No indexation, always short term. 140 is the full value of consideration. Cost of acquisition is 120. Acquired in 2021. Can I say it will be indexed? Sir, divide by CII of 2021 317 multiplied by 363. 317 multiplied by 363. 140. 120 divided by 317 into 363. Cost of acquisition will be 137.413. Total capital gain on this would be 2.586 8. This would be LTCG 112. Everybody clear? Everybody is clear with this point? Anybody having any doubt up to this point? If you have a doubt, do let me know. Second mutual fund, 50 double A. Are Baba, you can close your eyes in this case. Just do the difference, and 4 lakh would become your short-term capital gain. And since it is not equity oriented, by default, it will be normal STCG. Taxable at slab rate. Third mutual fund, it is equity oriented mutual fund. Equity oriented mutual fund have to be held for at least 1 year to make them long term. Always they have to be held for 1 year. Did we held them for 1 year? Right answer is no, they have been held for less than 1 year. They have been held for less than 1 year. That means it will become short term capital gain difference of 3 lakh would become short term capital gain under section 111A. Fourth point, equity oriented mutual funds bought in 2022, sold in 2024. Bought in 2022, sold in 2024. That means held for 2 years. That means they would be long term capital gain, and 10 lakh would become long term capital gain under section 112A. That means our total capital gain would turn out to be 4 plus 3 plus 10. That means 19.5868 would be our total income in case of Mr. Sanjay. Everybody has got this point correct. Sir, one question was asked yesterday. Somebody asked me, don't we have to reduce 1.25 lakh from this 10 lakh capital gain? Right answer is no. 1.25 lakh is not allowed as deduction while computation purpose. While calculating taxes, we have to reduce this 1.5 lakh. But for computation purpose, 1.5 lakh is not reduced. Okay. Now, continuing further. Continuing further, we have to calculate the exemption. Now, for the purpose of exemption, which mutual funds are relevant? Sir, exemption is always allowed on long term. That means exemption on this is not available, exemption on this is not available. Can I simply say that fund number A, whose total proceeds were 140, and fund number 4, whose total proceeds were 120? These two were used. Out of these, some portion was used, and 200 lakh was invested to buy the house. Correct, Anjana. Out of 140 and out of 120 and 140, some funds were used from A funds, some funds were used from 4, and total we got 200 lakh rupees. Now, how do we take from which fund, how much we took? That is upon our discretion now. How much money we took from which fund, that is upon our discretion now. We have capital gain of 10 lakh in fund number 4, and we have capital gain of 2.56 lakhs in fund number 1. Can I simply say that entire 1.2 lakh rupees have been taken from this fund, and out of this 120 only 80 lakh has been taken, so that total tallies to 120? Can I simply use this tax planning method? Out of 200 lakh, the fund which has higher capital gain, I'm using more from that fund, and the fund which has lower capital gain, I'm using lesser from that fund, so that I can have maximum exemption possible. I can have maximum exemption possible. That means, can I simply say that cost of new asset will be 120, net concession will be 120, and capital gain multiplied by 10. So exemption in this case would be 10 lakh rupees. Second thing, out of this 140 lakh, we used 180 lakh, and therefore 2.5868 lakh capital gain would be exempted. Multiplying this would give us exemption. 80 divided by 140 into 2.5868. This will give us exemption amount of 1.4782. Totaling this would give us 11.4782. This would be the exemption amount, reducing this from capital gain. And our tax would turn out to be, capital gain would turn out to be 8.108. Why? Now we have a question. Why can't you add this? Neha, you can add this. In real life, you are allowed to add this. But just think of this. If you add this, Neha, just adding for your reference. Okay? For adding for your reference. If I have total 260 lakh rupees, out of this 260 lakh, I used 200 lakh rupees, and our total capital gain was 10 lakh plus 2.5868. 260. Okay, 200 divided by 260 into 12.5868. Our exemption would turn out to be 9.68. True, true. Don't you think that you're losing out some exemption? Don't you think that you're losing out some exemption? If you want to add them, you can add them in real life. You want to have a loss of the client, it's okay, no issue. But in examination, you have to use the best possible method. And best possible method is to use the entire money from the asset in which we have highest amount of capital gain. You can do, of course, this is allowed. In real life, you are allowed to do so. But in examiner won't give you marks because this is lesser exemption. Ideally, he can get exemption of 11.47 now. In numbers, you might see this is of no difference. But think of the seller point of view: 2 lakh rupees of gain, 20% taxes on that. That means you are causing a loss of 40,000 rupees to him now. Yes, yes, Neha. Kevana, sir, 120 we get exemption. No, Neha, no, Kevana, we don't get exemption on this 120. We get exemption on this 8.1 lakh when we are calculating the taxes. While calculating taxes, we will only get the exemption. Now, sir, how much taxes are levied? Can you tell me? Can you help me out with the taxes? Can you help me out with the taxes? Shall we do taxes calculation? Shall we do taxes calculation? If you all permit, I will help you out with taxes calculation. Wait. Let's do tax calculation. Let's do tax calculation. We have long-term capital gain under section 112, 2.5868. We have short-term capital gain 4 lakh slab rate. We have short-term capital gain triple one A 3 lakh. We have long-term capital gain 112A 10 lakh. If we consider exemption, this is completely exempt. If we consider exemption, 1.4782 is exempt. That means 1.1086 is the only taxable portion. 1 point, yes, Kevin. 1.8, sorry, 1.1086 is only taxable, and this would be taxed with the given amount. What tax rate would apply? 112A. 112A, since it is sold before budget, it would be taxed at the rate of 20%. 20% would apply to this. This would go to slab. If SSC is following old tax regime, if SSC is facing old tax regime, then in that case, what would happen? He would be taxed up to 3 lakh, no tax, and on 1 lakh, he will be taxed at the rate of 5%. That means 5,000 tax would apply. Under triple one A, he is selling this asset before budget. If he's selling this asset before budget, that means 15% tax rate would apply. And under 1128 is already exempt. Now we already took entire exemption, so no capital gain would be attributed to this. So no tax calculation will take place. This is how you are going to do tax calculation. Now, Neha, just answering your question, just think if you did the combined composition, if you did combined calculation 200 divided by 260, how would you split this benefit? How would you split the exemption for the purpose of tax? It would be difficult for you to distribute the calculation. Now, then you have to do a proportionate basis. Yes, yes. Beautiful, beautiful, beautiful. Neha, perfect. Everybody got this point. This is how to do the question. This is a beautiful question. I must say, this is a triple star rated question that covers every aspect of amendment, that covers every aspect of every period of holding, that also covers your all the kinds of tax rate: 112A, 112, triple one is small tax, 50 double A. This also covers 50 double A provision. This also covers section 50F. And just see the size of the question. This question is just this 4 5 liner. Triple star rated question. How do we present this answer, sir? How do we present this answer? Petition in the hands of Mr. Sanjay. I know, I know. I also did that. Don't worry. I also did that. I am very blunt on what I am saying. I am very clear. When I did it for the first time, I also did not consider that we can consider different things. This question was from, I guess, November 23 RTP or May 24 RTP. It was something like that. But I also did the same thing. So you can take this granted that it is doable. It is doable mistake. But think, if you did not practice this and you finally attempt this in exam, will you be able to solve? Of course, you are going to do wrong now. So that is why question practice is important. Even if you know all the concepts, you might still do some wrong things. So for that matter, question practice is important. I hope you got the point. Sir, how do we present this answer? Complete capital and computation in the hands of Mr. Sanjay, previous year 24-25, assessment year 25-26. BLR fund, full value of concession 140, index cost of acquisition 137.41, capital gain turns out to be this much. We did normal calculation that we did. We'll do here. Second number, ABC fund, 50 lakh rupees is full value of consideration, 46 lakh is the cost of acquisition. This will give a short term capital gain. And since we it is covered under 50 AA, we have to give this in a note. Third number, ABD mid cap fund, full value of consideration 118, cost of acquisition 115, 3 lakh will be short term capital gain under section 111A. SBA fund, full value of consideration 120, cost of acquisition 110, long term capital gain under section 112A. This will give us capital gain that will be his total income 19.5867. Now here we have to do the exemption portion. Capital gain is this much. Exemption under 57. SBA fund. Capital gain is equal to capital gain multiplied by cost of new asset divided by net consideration. 10 into 120 by 120. This will give us 10 lakh of exemption. And on BLR, 2.5868. 80 divided by 140. This will give us the other exemption. Total taxable capital gain will be this. Out of this, if you attempt this much only, the examiner is going to give to 6 to 7 to 8 marks. He is going to give you for sure. Presentation in this answer wasn't difficult. Presentation, of course, in entire capital gain is not difficult. Only difficult thing in capital gain is just sticking to the basics, sticking to the format. Format is the key in this chapter. Come on to first question of capital gain. First question of capital gain. Very simple question. All the other questions are simple. Only two or three questions were difficult. One of them was Manan one that I have given you DPQ. If you would practice, you will be you will be able to understand why it is difficult. The practice that what we did yesterday na, as to whether we should index after budget transfer, capital gain exemption difference, everything is covered in that question. If you do it now, you will enjoy, you will understand the depth of detail in that question. The following are the details of the income provided by Mr. Singh, assessee for the financial year 31st March 2025. Rental income from the property at Bangalore is 3 lakh rupees. So standard rent is 2.5 lakh. Fair rent is 2.8 lakh. Oh dear God, sir, we are not aware about what is standard rent. We don't know what is fair rent. How do we compute? How do we know? Sir, we are not aware about house property. Harish, if you have time, write detailed note. If you don't have time, write a shorter note. Need not necessary. If question is complicated, in that case, detailed noting is not required. Small notes would work. But if question is not complicated, it just carries 6 marks, then small notes would work. Sir, we are not aware about how fair rent, standard rent. We don't know what these things are. Fair rent, standard rent, we don't know. How do we do that? How do we calculate if we are not aware about fair rent, standard rent? How do we calculate? Arey Baba, just one thing I want. One thing, just one thing. Sir, logic. Whatever the fair rent would be, whatever the expected rent would be, anything can be anything. But can anything be higher than actual rent? If actual rent is 10 lakh rupees, why do you think? Do you think that government is going to tax anything else other than actual rent? Fair rent can be anything. Standard rent can be anything. But if actual rent is higher, do you think that government is going to tax anything less than actual rent? So in exam also, it might be possible that you are given these things, but you have to stick to the logic. You have to stick to the logic that anything high, if actual rent is higher now, anything lower would not be taxed. Only high, only actual rent would be taxed. Okay. For basics, I am telling, we have a term called municipal rent, or we have a term called fair rent. You have to take higher of those. Whatever thing turns out to be compared to standard rent, whichever is lower, this thing is called Gross annual value. This is not called gross annual value. This is called expected rent. This expected rent has to be compared with annual rent, and lower of these has to be compared. Lower of these has to be compared. This is called gross annual value. We have to reduce municipal taxes from this, and this will give us net annual value. This is the basic of house property. Even if you don't understand this, house property has been completely removed from the syllabus. This question is only done on the basis of simple logic that actual rent has to be always taxed if actual rent is higher. Rent will be 3 lakh. Municipal taxes, water taxes for current year and arrears. Say municipal taxes and water taxes are taxes are only are only allowed as deduction in the year in which we pay them. Municipal taxes are only allowed when we pay them. So out of this 3 lakh rent, 1.85 lakh went to municipal taxes. That means 1.15 is the net annual value. Interest on loan is 1,50,000 rupees. First of all, out of net annual value, we get reduction of 30%. 1.1 lakh into 30%. So 34.345 lakh is the deduction, minus 1.5 lakh is the interest that we will be getting. So after reducing everything, how much house property turns out to be? 1.15 minus 30% minus 1.05, 1.5. 69,500 is the loss amount that we got on account of house property. House property loss. Arrears of rent 30,000 received during the year, which was not charged to tax in earlier year. See, we receive arrears of rent. So 30,000 arrears have been received, multiplied by 30% because, minus 30% because 30% stamp deduction we get on house property. So 21,000 would be tax. So net income under house property would be net income under house property would be 49,500. 48,500 would be net income under net loss under house property. Loss from house property. This was the knowledge that was required from inter, or I think that this was the knowledge that you already have. We get 30% deduction of GAV, we get deduction of interest on house property, rent from house property. These were the basic things that were required in this question. Now, Mr. Singh has also property in Chennai. Mr. Singh's father acquired a residential house property in 2006. In 2006, Mr. Singh's father acquired the property for 1,25,000, and thereafter it was gifted to Mr. Singh on first. Same year it was gifted to Mr. Singh. Perfect. The property so gifted was sold on 10 June 2024. The consideration received was 25 lakh rupees. The stamp duty value was paid by 13% at rupees 3,90,000 rupees. What does this point say? Mr. Singh, full value of consideration. He sold the house for 25 lakh rupees. But the person who bought the house paid stamp duty value of 13%, equaling to 3,90,000 rupees. Or I can say, can I simply say, dividing by 13%, this would mean that stamp duty value would be 30 lakh rupees. 3,90,000 divided by 13%. This would give stamp duty value at 30 rupees. Can I simply say Mr. Singh sold the property of 25, but stamp duty value is 30 lakh rupees? Can I simply say that stamp duty value exceeds 110%? That means full value of consideration has to be ignored, and stamp duty value will be considered as full value of consideration. Wow. Wow. Reducing cost of acquisition. Did he pay any transfer charges? No, he did not pay any transfer charges. Did he pay any transfer charges? I don't think he paid any transfer charges. Okay, perfect. Cost of acquisition was 1,25,000. This house was acquired by his father. This house was acquired by his father in previous year 2006-7. So 6-7 it's CII. We have to divide and we have to multiply by 363. That means cost of acquisition would be 371,926. This would imply our capital gain would turn out to be 26,28,073. This is the amount of capital gain that would turn out. Sir, on sale on 1st Jan 2018, assessee had purchased two adjacent flats in the same building, made suitable modifications, and to make it 8 lakh and 7 lakh. See, assessee bought two houses, both adjacent to each other. One is bought at 8 lakh, one is bought at 7 lakh. He did necessary modifications and made it one house. Will it be considered one or two? Sir, it is allowed exemption. We understood the case law of Anand Baspa yesterday, whereby we studied that if we buy two houses adjacent to each other, and make necessary modifications to make them one, it would be considered as one house only. So for that matter, entire 15 lakh would be allowed as deduct exemption. 54 exemption is allowed. Again, on 10th October 2024, 10 lakh were invested in the bonds of NHI. Allotment was made later. See, house was sold. When house was sold? House was house was sold on 10th June 2024. He invested in the bonds on 10th October. That means within 3 or 4 months he bought the bonds. But allotment was done later now. So allotment is irrelevant for us. Yesterday only we understood that allotment is irrelevant for us. Allotment is irrelevant for us. We only have to see the payment date. So he has invested 10 lakh rupees now, so that would be allowed as exemption under 54 EC. This implies, can we have multiple exemptions altogether? Yes, we can have multiple sections exemptions clubbed together. So out of this 26 lakh 28,000, 25 lakh is the exempted amount. So 1 lakh 28,000 reducing the 25 lakh would give us 1 lakh 28,073 is the amount of capital gain. Sir, is this the entire capital gain amount? Is this entire capital gain amount? Sir, we had loss of house property. Can this loss of house property loss be set off against capital gain income? It completely depends upon regime that SSC is opting. If SSC is opting as per old regime na, default out of default tax regime na, he can set off this house property loss. 48,500, yes, he can set off. Under new tax regime, he cannot set off, but under old tax regime, he can set off this house property loss minus 48,500. 79,573 would be the answer. If I have not done some blunder, answer might be correct. Answer has to be correct. 79,543. Oh my God, sir. Oh my God. Absolutely correct. Sir, how could you do this? How could you get the correct answer? How could, sir, we never get correct answer? How did you get the correct answer? Why, sir? Why? How did you get the correct answer? Come to question number 5. Clear to everybody? Clear to everybody? Anjana, she is looking at me as if she is just going to kill me with this sword. Vaishnav, sir, practice, of course, practice. And just I am saying, just have trust on these super 100 questions. These super 100 questions are more than enough for your practice. If you practice these questions only, na, it is more likely to happen that you will be seeing at least 80% of the adjustments from these super 100 only. 80% adjustments you are going to see from are will be from these super 100 only. Moving further, question number 5. Determine the capital gain loss on transfer on listed securities paid at the time of acquisition and the transfer. STT was paid at the time of acquisition on equity or net mutual funds for assessment year 24-25. Tax payable thereon. Assume that these are the only transactions covered for the previous year 24-25. Try solving this question. Two questions here. Very simple questions these are. Mr. Prashun purchased 300 shares of A Limited on 20th May 2017 at a cost of 400. All these shares were sold on 31st May 2024 for 1200. So can I say full value of consideration is 1200? Yes, full value of consideration is 1200. Actual cost of acquisition, if I take cost of acquisition is 400. COA actual is cost of acquisition is 400. These shares were traded on National Stock Exchange as on 31st Jan. We have to always take the highest traded price. So FMV would be 700 and sales consideration is 1200 lakh. We have to take lower of FMV and sales, and we have to take higher of FMV and cost. So 700 would be cost. This implies 500 would be capital gain on each shares. He has 300 shares. That means 15, 1, 2, 3, 4. This would be amount of capital gain. If 1,50,000 is the amount of capital gain, 1,50,000 is the amount of capital gain, 125 lakh would be exempt and remaining 25 lakh would be taxed. It would be taxed at the rate of 10%. This means 2500 would be tax amount plus 4% education cess. Simple question it was, need not to stress. But this is a good question. This is a good question. Try solving it with me. Mr. Raj purchased 200 units each of equity-oriented mutual fund. Mr. Raj has bought 200 units of equity-oriented mutual funds. Fund A and Fund B. Okay. On 1st Feb 2017, he bought these mutual funds on 1st Feb 2017 at a cost of 550 each. 550 each, 550 per unit is the cost of both the mutual funds. 550 per unit. And how many units he had bought? He had units of 200 units per mutual fund. Units were not listed at the time of purchase. At the time of purchase, these units were not listed. But subsequently, Fund A was listed on 1st Jan 2018 and units were listed. Units of Funds B were listed on 1st Feb 2018 on National Stock Exchange. Raj sold all the units on uh, 3rd April 2024 for 900 each. The details of them were given below. Let's see answer. Let's solve the answer. Fund A, full value of consideration. I am calculating per unit wise, then we'll multiply it with the number of units. Every unit of Fund A was sold for 900. Yes, sir, it was sold for 900. Cost of acquisition, sir, actual cost per unit was 550. FMV as on 31st Jan. Remember, whenever we sell any listed mutual funds, was it listed on 31st Jan 2018? So this mutual fund was listed on 1st Jan 2018. That means it was listed on 31st Jan. That means if it was listed on 31st Jan, we have to take the highest traded price. If we have highest traded price, that would become FMV. And we have to take sales value. That would be 900. So our actual cost will turn out to be 750. That means 150 is the gain on each mutual fund multiplied by 200. That means 30,000 is the actual gain on this mutual fund. Mutual fund A gain will be 30,000. Gain on mutual fund B is good. Again, full value of consideration is 900. Cost of acquisition is 550 only. FMV we need to determine. Sales value we have 900. Sir, Fund B got listed on 1st Feb 2018. 1st Feb 2018 is the date on which fund got listed. That means, can I say that 31st Jan 2018 fund was not listed? Of course, it got listed on Feb now, so it was not listed in Jan. So if mutual fund was not listed on 31st Jan 2018, how do we determine FMV of those? Sir, we have to take the NAV. We have to take the NAV as on 31st Jan. We have to take the NAV as on 31st Jan. If we have NAV as on 31st Jan, take NAV. Whenever we have FMV or sales, we have to take the lower one. Sales has to be taken. Cost or this lower one higher has to be taken. In that case, cost of acquisition will be 900. Capital gain would be 0. Total capital gain would turn out to be 30,000 rupees, and that would not be taxed because it is 1.25 lakh is exempt. This is how do we compute capital gain in case of listed securities. Mr. First question done, second question done. Sanjay wala we did in class itself. Robert, you have to hold it till NR taxation. Robert wala, you have to hold it till NR taxation. We'll not be able to solve unless we do. Sir, Mr. Prem question. The question we practiced in class. You remember 45.4? You remember 45.4? Transfer of asset from partnership firm to partner. If you remember 45.4, the question that was covered under 45.4 is the same question that we had in concept book, is same question covered in Super 100. If you want to practice of your own, you can do. Otherwise, we have solved this question in class itself. We have solved this question. If you see, the entire 9D calculation that we have done in that in class is covered, and 45.4 calculation is the same thing. Same solution we have done in class only. Manan was the DPQ today's TPQ. Salsi Limited we did while we were solving slum sale. Last Shivansh question, only question we have to do right now. Otherwise, every question of capital gain is done. Only 5 or 6 questions you have to do out of entire capital gain. Can you see how many questions I have condensed for you? You don't have to worry about the subject. Concepts were good. Concepts have to be good for MCQ purpose also and for newer question also. But if you worry about question answers, you just have to do these questions only. These questions are more than enough. How much time did it take? It took only 20-30 minutes to do all the questions of capital gain. So last question we have to do. This question was asked in September 25 exam. This question was asked in September 25 exam. So we just have to be very careful about this question. Okay. What this says, Mr. Shivansh purchased 11,000 equity shares at the rate of 10 each of ABC Limited on 8th March 2017 at a premium of 40 rupees. Oh, face value was 10, premium was 40. That means 11,000 shares he bought for 50 rupees. Got it? On 7th October 2024. 7th October 2024 implies after 1st October or after 23rd July. The company buys back of 1,000 shares held by Mr. Shivansh at a price of 550 per share. Oh dear Lord! Oh dear Lord! Oh dear Lord! We are aware that after 1st October 2024, if any company does buyback, whatever the sales proceeds we have, whatever sales proceed we receive, that becomes our deemed dividend. That means 1,000 shares bought back at rupees 550. This implies 5,50,000 would be deemed dividend under 222F. If you see the answer, deemed dividend is this much only. ABC Limited. ABC Limited is the company in which Shivansh had shares, distributed its shares to the unit holders on the liquidation. Went into liquidation. Shivansh received 100 per share in cash and a piece of land in consideration of the remaining 10,000 shares. So Shivansh had 10,000 shares. Against these 10,000 shares, he received 100 rupees cash and he received plot. Plot was value. Book value and fair value of this land was 45 lakh and 60 lakh rupees. See, always you have to take the fair market value. Perfect. On this date, FMV had equity share capital of 1 lakh rupee or 10 lakh rupees and accumulated profits of 80 lakh rupees. Cost of inflation index. We have to compute the liquidation. We have to calculate liquidation. Sir, while understanding the provisions, we understood certain points. If you remember liquidation, we understood a point where it was mentioned that whatever distribution was made on account of liquidation to the extent of accumulated profits, it was deemed a dividend. It was deemed a dividend. Yes, sir, it was deemed dividend. Sir, sir. How much capital gain would arise? See, he is receiving 10 lakh of cash. He is receiving 10 lakh. Did he receive 10 lakh cash? How much cash he had received? 100 rupees for 10,000. Yes, he received 10 lakh of cash. Plus, how much, what other assets he received? He receives other assets of building or land. I must say he got land. That means 60 lakh of land he got. Minus the deemed dividend also now. Just try to understand how deemed dividend is being calculated in this case. Listen, company had 80 lakh rupees worth of accumulated profits. Shivansh holds 10,000 shares out of 1 lakh of share capital. That means out of this 80 lakh rupees of reserves, 8 lakh is respect to Shivansh. 8 lakh is for Shivansh. And Shivansh got 70 lakh rupees, oh sorry, 70 lakh rupees in return. Can I simply say that out of this 7 lakh, 8 lakh is deemed a dividend and that would be taxable in his hands. 8 lakh would be deemed dividend taxable in his hand. That means his full value of consideration would turn out to be just a 62 lakh rupees. 62 lakh would be full value of consideration. We just have to reduce the cost of acquisition in this case. We just have to do the cost of acquisition in this case. Sir, how much cost of acquisition? Sir, he acquired each share of at rupees 50. That means 10,000 multiplied by 50. That means 55 lakh rupees would be reduced. This implies uh, 57 lakh would be long-term capital gain. So do we need to index? Right answer is no, we don't have to index. Indexation number are given, but these are not relevant because indexation is not allowed after 23rd July. This is how we calculate question in case of liquidation. With that, we are done with liquidation as well. Now, Kishore pointed out something very, very good while checking and going on with you in live class, feeling very understandable. But at exam, feeling worried and doing some mistakes at some point, feeling it was due to lack of practice. Before, first thing, you are at a position where you understood this point that you are lacking practice now. Don't you think that at this point you understand this thing that you are lacking practice? So why not to practice? My duty was to explain you every point, was to take example of every point, was to tell you every difficult point that might come, and make you analyze every question answers with respect to every point. Right now, I have not skipped out even a single question of this chapter. One question is on hold because that we'll be able to do after an taxation. And one question I've given you for DPQ. Otherwise, every question we did in class. And I can also guarantee that with these questions, you will be solve every question that is in syllabus. Now, what's your duty? We are done with chapter. Your duty is to read the chapter entirely and solve these questions again of your own. If you have time now, solve these questions of your own. How much time did it take? Yeah. See, two questions I gave you DPQ, that much time you can give now. So DPQ, so you have to do, that is mandatory. But apart from that, only 4 or 5 questions you have to do now. If you are able to do 4 or 5 questions, then believe me, you will be able to understand every provision. And this chapter has 4 or 5 questions. Every chapter will have 5 or 6 questions, 4 or 5 questions. We have 12 bigger chapters. Every question 4 or 5 questions. Some theory questions milake. We'll have 120, 130 questions, and these are more than sufficient for your practice. If you practice this much only, now you will be able to solve. Right now, what happens is now we understand provisions, but when multiple provisions come together, now we are not able to apply multiple provisions. So these questions are for that only now. If you are not able to understand, if you are not able to recall in this Mr. Singh wala question, I know this Mr. Singh wala question is not easy. This Mr. Singh wala question in which we had house property also, we had set off provisions also, we had multiple exemptions also, we might face many doubt. But after solving these questions, your doubts would get clear now. So if you just rely on this fact that we did with sir and we'll be able to solve an exam, this is so not the case. This is incorrect perception. Me solving is just a way of explaining you how do we solve it and how do we practice it. How you can solve this in lesser time, and I try to simplify the difficult concepts in class. Baki, me solving is just giving you an example as to how do we solve it. You have to solve it at least twice or once. You have to solve these questions of your own, and not just 142. Whichever question you feel like you were able to solve at once, whichever questions you felt like you were able to solve at once, just write them down, and you don't have to solve them again. You don't have to do it. Once you are able to do it, just write them down. But if you are not able to do it, try to mark down those points which were trickier for you. So next time when you study those points now, you will be able to recall every difficult point you understood. And at the end of the day, you will have only those points that you felt difficult. Easier points every time would be strike down. Every time you will be able to recall more difficult points, and at last you will be only left with small chunk of portion which is difficult. Of course, despite of everything, despite of all these things, you might not be able to attempt all of a sudden new questions. But I can guarantee that with this process now, earlier when you were not able to attempt multiple new questions, now with this procedure, you will be able to attempt more new questions. Only one or two adjustments would you would be lacking. Earlier, when you used to do 10 mistakes in total paper, after this, you will be able to do with lesser mistakes. You will be doing only 2 or 3 mistakes. This is what the transition difference is. Of course, nobody is perfect. I also do multiple mistakes when I solve. Even today, I do multiple mistakes. But the process is reduce the number of mistakes. That is the only thing you do. Everybody who is sitting here who feel like, sir, we are confident, we are feeling confident when you are solving, but we are not able to do it. First of all, accept this fact that we need to practice, and second thing, accept this fact that we need to practice without watching videos, right? Doing it of your own. See, one thing I want to tell you, one thing I want to tell you. Yesterday I gave one DPQ. I gave one DPQ, honestly telling her, if I had solved that question without giving DPQ, 99% of the students won't understand this concept. 99% of the students won't be able to understand this provision, that we cannot club these two exemptions, because clubbing these two would give us lesser exemption. You won't be able to understand in class. You will think like it's okay, now it's okay, we'll understand. You will think like that. But when you solve it, you feel that my answer has gone wrong. You will try to identify why my answer is wrong. And when tomorrow I will be telling why your answer was wrong, you will be able to understand clearly. Sir, as usual, you spoke too much. As usual, you spoke too much. Okay, just summarizing what I said. Summarizing what I said. You have to practice of your own apart from what we do in class. It will not take much time. Just give 1.5 hours to me, or I should say 2 hours at least today of your own time. Or what you have to do. First of all, 1 hour would take, or 1.5 hours would just take for you to recall the concepts, and remaining half hour would be given to question answers. You will be able to recall, you will be able to attempt all the question answers. Even if it requires more time, it's okay to give today, because once done, it will not require this much time again. That's it. Practice of your own is required. That's it from my side today. Tomorrow we'll start PGPP. We are done with Capital Gate. Tomorrow will be last session on which we will be having on this YouTube. After that, we will be switching to Fast App. Whatever the app is, that access will be given to you. Second important thing, what I am saying is, even if you miss out any lecture, just message me out. I will take more lectures on YouTube. Even if not possible, whatever things after doing everything, remember, whatever lecture you come in, you are welcome. Even if you have missed out the previous lecture, do not skipping out the live lecture. Live lecture is something which is more precious than watching the entire recorded lectures. Believe me. Second thing, while solving, if you feel any doubt you did not understand, do send your query to me. Third thing, do solve DPQ. Today, you might be understanding what is the benefit of DPQ. Those who had solved yesterday's question were in a position to understand what issues they made. They were able to understand how they can improve themselves. At this point, thank you so much. If you have not enrolled, do consider enrolling. If you have not shared this video, do consider sharing. And one humble request, small humble request to everybody. If you like my content, do comment down your experience on very first lecture of the batch, because it would help others to know how do we study in the class. Your comment does matter. I do read that. Your comment really matters to me. Your comment would let others know how do we study in class. So on first lecture of this power batch, do comment down your experience. It would be of great help. Thank you so much. Bye bye. Take care. See you guys tomorrow. I'll confirm. I'll confirm today. Kushki sir, I'll confirm today. Whatever the case is, if it is available, I will share. If it is not available, then too I will share. Don't worry. Whatever possible thing is, I will do. Okay?